All right, there is. Oh yeah, cut this volume down over here. All right, peace, power, and profit to the family. What is going on, everybody, on this wacky Wednesday? The best title to really put forth in terms of this market today is that it is a very wacky Wednesday. Nothing that we did not see coming or foresaw that it was going to happen. More so, it's an acknowledgement that the markets are just pretty much tired. They're overbought and they're extended and they're just completely tired. They're fatigued. When I say they, meaning the overall broader market as a whole, the markets are fatigued heavily, right? Again, we're talking about a 30% move off the lows. He says, echoing? Okay, hold up. I think it's because I got this other thing on. I'm sorry. Awesome. All right, is it better? Can you hear me better now? Might check. I should have did that earlier too, so forgive me for that. All right, let me come over to my screen too. Mic check. Can you guys hear me clearly? Is my audio correct? Is my visual correct? Is everything fine on you guys' side? Peace, power, and profit. What's going on, family? What's going on, brother Raul? What's going on, family? JP. Excuse me. I always want to say JPJ. GPJ. All right. What's going on, family? Peace, power, and profit to you. Right. Can you guys hear me clear? All right. Yeah. All right. Loud and clear. Okay. Awesome. All right. So again, peace, power, and profit to everybody. Hope everybody's having a great day. As I always start off, with my, my greetings. All right. So again, Uncle Ja Sanel, life, prosperity, and health to you all. Hope you guys are staying safe. Safe, I should say, in the midst of this, this coronavirus situation. Even though they're trying to put everybody back to work, right? Get back to work, cracking the whip. But for the most part, we should have been in a position where we kind of have equipped ourselves with the proper, things that we need to potentially, if they send everybody back, depends where you are, around the country, I should say, having your masks and your gloves and all that stuff. I hope those things are pretty much, taken care of as far as your safety precautions. So now let's get down to business, right? You say it's two voices. Is it still doing the same thing? It says two voices. Let's see. Let me go over here and check again with my audio. If you guys are hearing two voices, press 1 in the back chat. Press 1 in the back chat if you're hearing double voices coming out of my audio here, because I do have my headset on. All right, and I do have. Okay, yeah. So audio seems, well, at least on the playback, it seems like it's pretty fine. All right, I hear you say I hear it fine. To be honest, so if there's any kind of lag, distortion, double talk, crosstalk, or whatever in my audio, please let me know before I go forward. I want to make sure I have it correct. You're saying you hear it. Yeah. I'll probably try to reload your page, brother Name X. Let's see if that works. Try to reload your page. Let's see if that works. It sounds good. Thank you, brother. What's going on, family elite? What's going on as well? Peace, power, and profit to you. All right. What's going on? All right. Yeah. Just try to reload your screen if necessary. We'll see if that works. If not, we'll try to figure it out. See if we can come up with something to rectify the problem, right? Because again, I do want to make sure, that everything is fine on you guys' end. Mainly so that we go forward and make sure everybody's getting the best of the information much as possible. All right. So again, markets today are reaffirming basically everything to a degree that we discussed and talked about yesterday with the previous live stream, when we kind of put some put some makeup on this pig and we dressed the pig up. Unfortunately, we realized that it was still just a pig when it was all said and done. Wasn't enough Maybelline makeup out there. Wasn't enough MAC makeup out there. In these well-known makeup companies out there, Estee Lauder, whoever, right, retailers or whoever out there that were able to accommodate this pig of a market in a way where it could sustain another day. Again, we literally map this trade out to the T, and I have to show this out the gate starting off before we get busy, right, and get deep into this. Again, peace, power, and profit to everybody that's coming through. Again, in the back chat, peace, power, and profit. Brother Name X, my family, GPJ, brother Raul in the house. Good to see you as always, family. Peace, power, and profit. We got family elite in the house. Everybody in the back chat that's also probably listening in and necessarily can't chat, just to kind of following the family along as we go. Thank you all for stopping by today. Again, it's your brother African Emporium going live on my second channel here. If you have not subscribed yet, please subscribe while we're dealing with some YouTube litigation on the other channel. Right? All right. I got my YouTube lawyers up and fighting on my behalf. We'll see what comes from that. All right. So again, let's get to business. Let's get down to business, because again, I want to make sure everything is thorough as much as possible. Make use, good use of the time I have available before I have to get off here at some point. Again, is the volume better as well, NameX? Is the volume better? Matter of fact, let me get the link again, just in case you guys want to come on. I implore you guys to come on the back chat as well. Again, if you got questions, you got things you want to share with the family in terms of your trading, what you may be seeing as well, what you may have traded earlier today, whatever the case, I do want to be able to offer that, the opportunity so we can come on like we always do in a village setting. Again, y'all know I come from the place of having a more, hands-on approach to what I like to share in terms of what I see in the markets, but also in correlation or a contrast to what you guys may be seeing, because again, that's how we learn and get better, right? So today's broadcast is sponsored by Powell. No, I'm just kidding. No, hand sanitizer. Got the hand sanitizer on deck. Again, as always, trying to always provide some kind of imagery of good housekeeping practices. Keep yourself safe, right? Right. Again, the coronavirus haven't gone anywhere. They're already saying that it's going, be around for a lot longer. But looking at the stock market, again, the stock market is not necessarily showing that we're having any problems far as economic slowdown, any kind of disparity, in terms of the workplace or whatever the case. We've just been having a free for all pretty much across all sectors. More so importantly, even though we know some of the transportation aspects of it, again, we're talking about, the oil market being kind of in the flux. We know that the airline industry is pretty much toilet paper at this point, for lack of better terminology. The cruise line industry trying to do whatever they can to kind of stay afloat. News is coming out on them daily. We just saw some news came out today as far as Norwegian cruise line, where Webbush downgraded them into earnings. They have earnings actually tonight. Right, so that's one you might want to keep on your radar. Not saying which way it's going to go, but Norwegian crow. I'm about to say some doggone cruise, or cruise line has earnings tonight, right? They have earnings tonight, and they got a downgrade today. So again, that was a day trade scalp that I took today as well. I traded it twice actually. I paper traded and I traded, in a live account too, just to kind of get some feel. That's when it was breaking out off the lows. I didn't get it initially out the top because y'all know I like to kind of wait for it to unfold a little bit. So it broke down, retraced up near like 1065, 1066, somewhere around that point. Hit some major resistance up in that point. It was kind of stalling out, and then it rolled over. All right. So again, let's go to the charts and let's get this party, get this party started, as we like to say. So we can kind of bang out some good information. Again, the link is in the back chat. You guys do want to come on. You guys are definitely welcome as always. Y'all know how we roll over here. All right. So let's take it to the charts. All right. So off the gate, right? Out the gate, no hands down. Let's go to the market. Let's go to the trend that I charted yesterday here for you guys here. Let me get this scribble off. I don't know what this mess here is. Get that off there. All right. So let me blow this up a little bit here. All right, let's make this very visual, real clear for you guys can see. I hope you guys can see that clearly on you guys' side. All right. You guys can see that clearly on you guys' side, right? Over Chris in the building. Over Chris coming through. Peace, power, and profit to you. Over. Happy to have you here as always. Right? Always happy to have Over Chris coming through.
Peace, power, and profit. Over. Good to be here with you.
Always, family. Always. All right. So what do you have here? All right. Let's blow this up so you guys get a quick little visual here. What do we see right here in terms of the S&P 500? This is the channel again. We did this yesterday. Keep in mind, guys, we broke this down yesterday. I told you all the levels I wanted you guys to watch for support, resistance, supply, and demand zones. Exactly what we were seeing for us the outflows in terms of money flow coming into the market or going out of it, right? Exactly where I would be potentially interested in the market and in the position, to the upside or down if it particularly, broke in favor of each direction. And lo and behold, obviously, I had a very bearish sentiment for a reason, giving you the points where I said the 20-day moving average is going to be a key level of support to the downside. If it holds, if it breaks, it's going to be lights out. Even though it pierced below it here, as you can see very, very faintly here, where we had a wick, an indecisive wick, like we always typically have when you have that kind of level of flushing out, which happened early in the day session. When I say day session, I mean when the markets kind of opened up a little bit, kind of spiked up a little bit, then it just eventually the bottom fell out the market. Next thing you know, we had this bearish engulfing scenario that happened, and we broke down. Obviously, within that daily momentum, the flushing, where again algos kind of let loose and began to sell into this market. And again, we had some kind of fire ignitions that was started obviously by the Federal Reserve, Jerome Powell, going live this morning. If you guys were able to catch it, I was able to watch it myself. Some of the news publications began to print some of the stuff that was coming out, and this is that he was saying, where he still had somewhat of a very mixed signal he was sending to the markets, that he was not necessarily not going to rule out the idea of taking interest rates to particularly, negative zero interest rates, right? But more so that they're still trying to be accommodative as possible. His words, again, they always try to use that kind of, kickstart the information to try to see if the markets are kind of rebound off of that or get excited about that. But he sounded very nervous today. He sounded very uncertain, unsure. You can tell in the inflection of his voice that he typically would sounded when he was kind of, when they're doing like the FOMC type of meetings. You can tell that they were, or basically that they've pretty much exhausted a lot of the things that they had in their so-called bag of tricks to keep the markets afloat. Those things are now becoming even more transparently weak, and the markets are now starting to respawn naturally, even if it's just for a couple of days, right? It's starting to respond naturally to some of the economic headwinds that we're starting to come out. With the CPI numbers that came out yesterday, they were horrible. We had what numbers came out today? We had what data point came out today? I forgot what it was. I'll see if I can pull it up. But those numbers came in like horrible today as well. Matter of fact, if you go down my description box, I think I have some of the data points that came out today. I think it was I have to go back and pull it up and see what we were, what those numbers were. But either way, we did have some economic data that came out that kind of caused a little flux in the market, and we had some pulling back because of that as well. In tandem to that, what we were receiving out of the, Jerome Powell and the Federal Reserve, pretty much letting everybody know at this point that they're trying to still do everything they can in their arsenal to, again, stop a lot of the kind of economic, headwinds that are now facing the markets week over week. And that's with an economy so-called that's getting ready to try to open back up here on the May 15th, on a, pretty much selective statewide scenario across the country, with basically only a few of them that are still, maybe not opening up, but that are not going to open up based on the coronavirus, still being a headwind situation in their particular areas. But again, getting back to the S&P 500 here, again, this thing, to the T, came down, hit that bar what we set for us yesterday, and bounced. Even though we had the kind of wick, scenario that came down where it pierced below that, came down and hit like 279.57 and change, and then obviously, like we always seem to kind of witness around the 12 o'clock, lunch hour, algos, actually began to kind of take back a little bit some of that weakness. And now since then, we've kind of retraced up now, roughly about 2 points and some change off the daily lows, with the market now still trying to retrace some of this bearish engulfing candle. Now, if we go to a shorter time frame here, let's say we go to the 30-minute chart, you still see a lot of weakness. Obviously, within inside the channel here. Again, a lot of implied weakness off the 200-day moving average, where the market kind of hit some resistance there. Could not necessarily penetrate it to the point where we can get some good follow through off that. And this is pretty much today's action, obviously coming out off of yesterday's pullback off the resistance up here near the top point of this channel band here. And I'm saying 200-day moving average, but this little, obviously within this point of the 30-minute chart, which is clear resistance here on the 30-minute chart on the S&P 500. And knowing that there's only maybe 10, 20 companies within the S&P 500, if that, maybe 10, that really control the greater, weight of that S&P 500 ticker symbol, the ATF. And that's if you watching those, how they were trading up pre-market. Again, which was odd to me anyway, because the market actually gapped up pre-market. Like how? Like how are you gapping up pre-market, knowing how we ended yesterday, knowing that there was no true, fundamental catalyst to give the market any kind of representative aspect of why the market should be trying to gapping back up today? No more so than the fact that, whatever little repo operation that they tried to get explode into the market to help, like we witnessed the other day when I was breaking that down to you guys, it was just pretty much just garbage. It was just pretty much a garbage, in my opinion. Again, my opinion. Excuse me. Going back over here, I'm back a little too far. Going back a little. Matter of fact, shorten the time frame down. That's probably why. Let me go to the 5-minute chart. Excuse me. 5-minute chart. All right. So again, markets open up. After selling off again yesterday until the close as it did, and it was somewhere around about 284, whatever the case like that. And then the market, obviously springs back up to roughly around about 286 and change, and then it obviously kind of smashed back down. And since then, again, we've been kind of trending in the bear flag pattern, to the downside, testing this band here. As you can see that again, this level of support that we put on the on the map yesterday, and barely surfing it right now. So basically, the broader market as a whole is starting to follow suit, right, in tandem to the weakness that we're getting out of the S&P 500. Again, it's just overbought. Let's be honest, we already know that. We kind of talked about it on the previous live streams that we were having here, where we're just starting to see the follow through starting to happen now, where a lot of the call buyers who were still stacked in coming in, maybe the 1st of May, all right, that was still holding on into the 15th, those expiring, option contracts that are expiring this week. Some people are beginning to take a lot of their profits a little early in that, because they start to, witness the strength of the selling coming into fruition. Especially yesterday was a telltale signal in that, and that's why you had this kind of straight line, in a very, proficient, profound manner, almost like in a 45-degree angle, which is obviously in our case in the stock market, where y'all know that to be somewhat like considered to be like a straight line for us. When you see that kind of action happening like this right here, that means there's a demonstrative aspect of selling that's happening, where the confidence in that those sellers who are getting out of the way are very, very solid in securing that they're making the right decision at that point, right? Because again, we've rarely been able to see this kind of action happen in S&P 500, since again going back, pretty much off the March lows, right? Near the March lows, when the market kind of had that kind of that wake up call. In some parts we saw some gapping downs and whatever the case in April, but just to kind of take it back to where we are today. This is a very, very revealing signal here, and watching the markets kind of pull back in these kind of lines like this in the S&P 500, where we're now starting to get some what they call rotation, and some of these fund managers, obviously, I'm sure when they start releasing some of these 13 filings coming up here recently, all right, soon we're going to see a lot of the people reducing some of their share size in some of these major gappers that's been happening in the market. Basically, you got companies like Apple, Netflix that's been banging, making all-time highs during the coronavirus situation. You got stocks like what was the other one? Like was it Trade Doc? I think Trade Doc, if I'm not mistaken. There's so many of them out there. Definitely we know Zoom has been a power player in the aspect of the market, because of the fact that, again, its use case aspect. When in this teleconference apparatus that it has, again, going back as far as let's say go to the hourly chart, you'll see that this stock is still in an uptrend. I mean, even though it hit all-time highs up here, roughly around there 180 and some change back on the 24th of April, it kind of, retraced some of that, that down a little bit. Obviously, we hit the news that, they was having issues with, security breaches. So obviously the government necessarily could not use them without having those security patches in play to protect that sensitive information. Since then, Zoom saying they somewhat corrected it to a degree, right? And so with that, they caught a new bid roughly off the lows around about 133. And now we're banging back up to the upside here, roughly around about 170, is that new level of resistance, 171, right? And again, it's kind of forming a nice still bull flag pattern here. Again, trending ever so slightly below the VWAP here, but, nicely above the 20-day moving average here. Even though it's pulling back a little bit today, again, doesn't negate the fact that the stock is still in the uptrend because it's still, feeding off the coronavirus, sheltered in place business, telebusiness kind of operations that's happening. So just watching this one here, we spoke about Twilio as well. Another one of these companies doing, cloud server business that has benefited greatly off the coronavirus situation as well. Again, pulling back today a little bit because the broader market obviously had a major flush that spooked a lot of the investors. Even in some of these stocks that are somewhat safe plays or defensive plays, they're starting to pull back again today, which is obviously just profit taking, right? I mean, they're up nicely off the March lows, notably so. All right, but again, going back again on Twilio when it was trading roughly around about $68 a share, 69 bucks a share, and going up as high as 194, 195. You're talking about explosive growth move. I mean, seriously, well over 100% and change in about a couple months here in terms of Twilio, right? And so now you're having a little bit of pullback where it's kind of testing this midpoint line here on my linear regression band. It's at that medium point where it has a barbecue or mildew, right? So if it breaks this line, which you see here is barely holding here at the linear regression band, this middle line here, if it actually breaks it and closes below it, right, and definitely tests the 20-day moving average, which is roughly around about, again, as you can see at this point, about 184. Just let's say 184, just to make it an even number. But if it breaks below that, it could easily, I'm saying easily, obviously it could take a little time, but it could find itself down testing at the point, at the point where, down here at the bottom of this, linear regression band of the support, roughly around about 166, 167, somewhere around there, right? And so we'll keep an eye on that just in case, but again, knowing how these markets have been trading recently, and the Feds will just have this maniac mandate to keep the markets propped up. It ain't, within, in our thought process that, easily, even though watching the S&P kind of pull back today, that they'll try to come up with some kind of excuse to find some money from somewhere and try to run this market back up. At least back to the medium or the mid line or the medium line or the mean line, as you want to call it that, around about 285, 286, somewhere around there. But as of now, this was a clear short. We talked it up yesterday. We was very clear and precise what we saw, what we was looking at, what would be the key, telltale signals to kind of give us that, that natural flush after watching, again, yesterday's bearish engulfing candles, which was very, very revealing. Because I say when you have that kind of level of flushing right there, that means algos are losing control a little bit. That means you're starting to have some distribution to the outside. That expansion, when I say outside, I mean the outflows, when people starting to sell some of their positions that rode the market up. And sure enough, we closed this gap. Like I said, we closed this gap, around 283. We want to start looking around that 281, 280 level. And here we are now testing it here. So, again, the markets are very, 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 very shaky right now. And so you best believe they're going to try to do everything in their power, right, to keep this thing from breaking below this this support point to the downside or resistance to the downside at this point, to the upside, I should say, excuse me. And so, again, that's what some of the levels that we're watching. If you're late to this party and you're thinking about whether or not you should play the bounce here in the S&P 500, well, again, you have a top side, resistance here on the S&P 500, roughly about 282.34 on the 20-day moving average on the 1-hour chart, and roughly this, 280 point, 280.80, 280, if you want to say 280.90, whatever the case, to the downside, right? Again, so if you make it an even hold number around 280, even, obviously, that puts you square at this pivot point here on this wick here on the, on the 1-hour chart on this particular bullish candle here, even though we know we flushed down to 279 early in the morning, because again, you're going to get that out the gate where you have a lot of day traders kind of, repositioning their position. So that's why you had that level of volatility early in the day trading session where you had a limit, pretty much a close to a limit down. All right, we had almost hit limit down out the gate, which was surprising. Not out the gate, excuse me. After around about around this time frame here, when the market began to really show some weakness here, early on in the day session, right? So, but again, we're watching some of these key levels of support. If they do not hold, we'll see how the things shape out in the next hour or so, because the markets are really beginning to show them, its strength. Whether it's going to hold or fold or roll, I should say, into the the back half of the day here, which we are at this point, into the close, where we may break right the intraday session low, which is around about 279, 279.50, or at least breaking 280. Right, my line in the sand, opposite for me and me only, again, my opinion is if we come down to test that 280 again, right, the 280 level is going to be a very, very magical number for me to really get me, get my creative short seller juices flowing a little bit, right? Whether or not I want to add even more to some of my short position I already have on, right? But I need the S&P, the broader market, kind of show that weakness, that which will also cause these other stocks to kind of fall in line, right? Follow suit, right? Again, when the general gets destroyed, a lot of the foot soldiers always at that point are what left scrambling, trying to figure out what to do next. And so we know that the S&P 500 is pretty much the general of the stock market. It's the overall investor sentiment indication, ticker, ETF, whatever you want to call it, that we watch. They kind of affect the broader market. For the most case, for stocks that are trading in correlation with it. When I say correlation, meaning in trading in tandem and in a parallel faction to whatever it's doing, they're doing the same thing, almost mirroring it to a T. And so when we're seeing this kind of level of weakness that we've been able to spot and talk about over the past couple of live sessions that we've been having, watching the market pink up against some key levels of resistance around this 295, 294, we're seeing to be in just an easy short for those who were looking to kind of get in on that action. Now you're reaping the benefits of it. Now you're starting to reap the benefits of it. Again, you got companies like Boeing. Y'all know I've just been a destroyer of Boeing, right? I've been preaching the Boeing conversation like crazy. Again, you see I got my bars up here that we put on here the other day to show you exactly what I was talking about. I said, you know what? We get to that point where we're getting ready to break below it, right? Well, what happened today? Right? I've been vindicated, right? I got exonerated today, right? Not guilty, right? Not guilty. Judge slams the gavel down. You're free to go, brother African Emporium. Have a good day with your bag that you just made, right? Here we go. We broke below that line. And again, this is what we've been waiting on, right? This is what we've been waiting on. We know that Boeing had news yesterday, obviously causing it to be even more of a what's the word I want to use? A thorn in the side of the SP 500, because it is a major indicator in the Dow component that carries a lot of weight, even though it's been been beat up a lot lately because of what it's dealing with its turn in terms of the 737 MAX plane getting back into flight. But it's also been having issues with cancellations that's been happening, obviously, for its planes. A lot of people obviously not flying anyway, so people don't need all these planes that they was going to order from them, so they've been canceling, and people not haven't been making any kind of new orders. So Boeing obviously is in a lot of trouble again. And you had people telling me, even when it flushed back down to like $90 back on the March lows, that there was no way Boeing was not, going to ever go below at least 140, 130 ever again, at the point where, it began to rebound off the earnings, so-called, that it had going back on, March 28th, right, March 29th, excuse me, and it gapped up basically from, at around 130 point and got back above near that 140 handle. And it was like, it's not going back below 130, bro. I don't know what you're talking about, right? Even though we had some pulling back here going on May 5th, and it pulled back below that down to like 122, way back in this point, it's like, there's no way it's going below 130, right? So basically what it did, it trapped some bulls, right? So when it pulled back, rough around that 122, excuse me, around this point here, around about 120, 120, 122 back on April the 2nd, got back above it again. Excuse me, I went too far back. Around this point here, around April the 28th, 29th, on the earnings beat, pulled back below it here around about May the 6th, I should say, excuse me. And then it kind of resurged back up to the upside and printed a what? Head and shoulders pattern, right? We spoke about that yesterday, hence you see my little ugly little squiggly lines on my chart. This is exactly what I was showing you guys in terms of weakness, right? This was a fugazi pop to try to get the market off the low. So basically what happens is if the broader market is down, they will find individual stocks like a Boeing or Apple, or a stock that has a major, strength component to the overall market, like an Amazon, and they'll try to pump those. right? For no apparent reasons, they'll come up with a reason and say, well, well, let's get some inflows going in this stock because that will change some of the sentiment that may be hurting the broader market, and they'll try to pump these stocks up. So you saw that happening in Boeing roughly around around about May the 7th. Again, you had a nasty little bullish engulfing candle. I'll say nasty because, again, we know what's going on there. That's a lot of money. All of a sudden, this came out of nowhere into a failing stock. Where all this money come from is no more than shorts covering, to my knowledge. I would say shorts covering. Also, with some banks seeing that happening. All right, with some of those banks that were shorting it, basically, all of a sudden they did, they just covered and went long, right? And again, you can't compete when banks starting to kind of fold into a stock that's heavily weak, or they've been selling off, and they use it as a key indication to kind of get bullish on it again and kind of run out any other short sellers that's been lingering in the short. That think they're just gonna kind of sit and just ride it down, because we know that was a key level support at that point, around at 121, right? 121 and some change. Well, 122. We'll say 122 at that point. Well, today confirmed the fact that the breakdown was what it's been confirmed, right? Because we broke below that 122 with strength, and now we're on our way testing that 120, right? So 120 line in the sand. Obviously, we're looking to see if we can break below 120. It's down at 120.70 right now. The broader market's all and rolling back over after the lunch day, midday pump, where you saw the SP 500 kind of gapping up. Around about that, 12 o'clock hour, as it always does, because the algos are waking up, right? The algos seem to always want to wake up around about 12 o'clock. And what you have here is basically what you see right here, right? This little kind of, retrace off the lows around about 280.43 and ran all the way back up tonight, 282 near 280, 282.30 or somewhere around there, 282.10, somewhere around there. And right, and then basically in the next 30-minute session, what did they do? Roll right back over. So all this was just algos, shorts covering a little bit to retracement that's starting to kind of come back in. And now the market's kind of on its way back down to the downside here on the back end of the day, which I see here, this momentum is just too strong to the downside to be trying to play any kind of scalp calls at this point. My opinion, again, my opinion only. If you are trying to play some scalp calls here, be very careful. Be very careful. Right? Because again, there's a lot of implied weakness here. That's not by mistake. Seeing this right here, this kind of, soldiering down right here, this leveling down here, throttling down, that's not by mistake. Right? Now, before you could have played a lot of that kind of stuff in a very snapback bullish fashion, going back on the May 5th into the 6th, where you saw that kind of level of pulling back into somewhat of a gap fill at this point, close to it at this point, necessarily didn't close it here. And then the next day, what's happening? Gapping back up and running back higher. Right? With this kind of level of sell-off here, this kind of level of string selling off, right? That is more revealing than this kind of sell-off, than this kind of pullback, right? Then something even as in relation to this right here, this gap down here, and it kind of hit the point of resistance at the bottom of the support, or at this support point here, bounce kind of came back off of it, right? But this one here is very demonstrative, right? Because what do you see here? You see some selling, then you see a gap down. This is just all selling, right? Them big bearish engulfing candles here. If y'all know, we've learned anything about bearish engulfing candles as telltale signals to complete, bearish sentiment. When you have that kind of level of outflows, that means that's real selling, right? That's not gapping down on implied bad news because the futures market seem to kind of turn a pivot. This is just people saying, "Hey, no, bro, it's time to take a little bit of profit here," right? We rode the gravy train pretty well, off the March lows. Even from the month of April in itself up until May, which we are in, at this point now where we're starting to see that kind of, weakness that come alive around by April 29th, which is weird too, because literally, right, April 29th, April 23rd, the 30th, into the May time frame, that's what you start to see the monthly outflows starting to kind of, turn the market over, because the month of April was just stellar. Right, the month of April was just a stellar month for the stock market. Again, having all that money coming in from the Fed, the printer was just going brrr, right? The printer was going brrr, right? They would just print money left and right, like it was just no tomorrow. And then the month of May said, well, maybe it's time to again shut all this down a little bit, right? And let's kind of rebalance ourselves in a way to see if there's any kind of economic headwind, or tailwind that we can get to say that we can kind of get back to some kind of level of normalcy in terms of what we're going to do with this coronavirus situation. But that stuff didn't come to fruition. The news that was given with some of these so-called drug makers like your Gilead, Remdesivir, the NIO in Nvidia, Moderna, all these companies who are trying to come up with some kind of cure to make people feel at ease to want to go back into a workplace that's going to be obviously highly infected, no matter how you try to look at it. And we're seeing that now for some of the states that open up already, they're having a resurgence in cases. We're starting to see death still kind of stay at a somewhat of a equilibrium where it's not necessarily falling. So that's problematic. And they're talking about opening up in the next 4 days. And there's people who are still like, no, it's no way. You can tell me that, we're in a position where, again, we still don't have even adequate testing, right? We still don't have adequate testing right now to be getting y'all excited about, again, opening back up. Just my opinion. Again, this is strictly my opinion when I say that, to make people feel comfortable going back into a work environment, especially if you live in work in a very tight, confinement, particularly where you have a very dense work environment, where people will feel comfortable in that. So markets began to kind of really realize that the American consumer is not feeling really confident in terms of what they're getting out of the government. The Federal Reserve is just doing the mandate or the work of, again, capital markets. If you just had, if I had to have my opinion about it, they're just pretty much taking care of the capital markets, because we haven't really seen no really true solid data that's showing that, again, they're really trying to go to bat for the American people. I mean, in terms of Main Street, right? So we know how this stuff go anyway, right? But another conversation for another day. But just again, going to the broader market, what do we have here? Again, SP 500, obviously breaking below the yellow line here. That's support, and we're seeing this weakness here again, like I was saying before, going into the back end of the day where the momentum is still strong to the downside. You had some big runners today that kind of woke up out of nowhere. BTIQ was one of them. Matter of fact, I was watching another live stream earlier. The guys over there at the Stock Traders TV channel, and this was one of the ones they was watching as well. Obviously, I saw it earlier today too, watching one of my scanners, but it broke out today. Obviously, it had earnings going back on May the 8th, and then you had a gap up scenario coming out of yesterday into today, where it gapped up from $26 a share and ran all the way up to like 35. Right, it had a halt situation where it got halted, up near about 35. Interesting enough, when I saw all that happening, I actually got short on it, right? A rough around about 33. I think I got short around about 33.26, somewhere around there, right? When it was breaking down, right, into that, when the stock, came off a halt. And again, after that, it flushed down to around about, $25. I mean, just y'all know how stocks are when they kind of go into halt scenarios. It flushed down around about 25, right? So I took a little bit and left a little bit in, obviously a little bit, and then as you can see, it retraced. I mean, like gangbusters off the lows, got back up as high as rough around about 31.85, somewhere around there. Hit some resistance around 31.23. As you can see right now, it's kind of pulling back slightly here. Still in the bull flag. It's still in the bull flag. Don't get it twisted. All right, it's still in the bull flag kind of pattern scenario if you look at this triangle perspective, right? But again, the market is down. The sentiment of the market is kind of showing weakness, even though you have plays like breaking out on their own, separate of the SP 500. They're still weak in terms of people maybe thinking to take profit. That kind of caught this gap up from yesterday into today, and say that we'll kind of live to fight another day and take some of this this money and be happy with that. So again, just watching this wick here, a rough around about $29. Watching to see how it's going to close here in the back end of the day would be a true sign whether or not that this stock obviously may be giving back some of the gains coming out the 8th of May in terms of its earnings beat, so to speak. Gap up and run in this stock VTIQ. Again, it's a play that's trying to dealing with a Vector Q, whatever it's called, Vector Q. Vector, what I don't even know how you even pronounce that mess. As you can see, Vector, I guess I say Vector or whatever acquisition corp. It may be giving back some of these gains a little bit. So we'll watch to see if it breaks inside this linear regression band here, roughly around about 2870-ish, somewhere around there. If it breaks, but inside this band here, then it can get a little messy, right? It can get a little messy here in this stock here, right? So already down about 29.91 here, kind of fighting within this little 1 hour candle here. At this time frame, roughly around about 2 o'clock here. Right, so that was the one that was running. We also had Crex, right? Crex was another one, right? I'm just running through some stocks real quick before we kind of open it up for everybody else to, kind of jump into. Just kind of run through some stocks that was kind of in play today. Crex was another one that gapped up today, right? Looking at the hourly chart, matter of fact, let's condense it down to maybe like the 30-minute chart on this one, right? Again, just gapping up, right? Gapped up today, roughly a little bit about 9:10. As y'all, well, matter of fact, let's go to the 5-minute chart, right? Because I want to show y'all this. Y'all know I use my little simple little strategy that I got. It ain't nothing spectacular, but it works in terms of obviously giving you a unit direction perspective. When the markets begin to kind of give you that telltale signal of a reversal, right, it starts to kind of make sense of itself, all right, to a degree, right? So basically, roughly around about let's say 9:30, you had the market kind of open it up, kind of perked up a little bit around about 320, somewhere around there, and then it pulled back, right? It pulled back, right? As a matter of fact, let's go to the 1 minute chart. Right? I know it's gonna be ugly, but let's just go to it for the sake of the conversation, all right? For the sake of the training, all right? All right. So again, basically what you had here was a lot of just weakness out the gate, right? A lot of spottiness, right? Nothing necessarily major in it, actually. In terms of the morning flow, the volume was very thin, and then the volume came out of out of nowhere, like game buster, and the stock kind of went crazy, right? So rough around about, let's say, shucks, we're back here around about 9:45, 9:46, 10 o'clock, somewhere around here. In this little channel here, obviously below all major indications of VWAP, 20-day and the 50-day moving average. It was just spotty at best. But when it began to kind of reclaim the VWAP here, about 10:30, that's when it seemed to kind of start to kind of out of nowhere. You had a small little tic tac volume coming in, but it began to kind of show some favorability that it may want to do a little something. It got above the 20-day moving average, right? That's when the volume came in. Couldn't make this stuff up. Look at all this spotty volume here on the 1 minute chart. As soon as it crossed over the 200-day moving average, right? Some of you guys got 200-day moving average, scanners out there, just kind of anything that's reaching over a 200-day moving average on a 1 minute or 5 minute chart scenario. That's when you want to go look at some of these stocks. The volume came in like gangbusters. Look at these big bullish green engulfing candles here on the 1 minute, right? And look when it cleared over the moving averages to 20, the 200, and the VWAP, it became even more bullish, and it stayed above it pretty much the entire day, all the way up until around about 11:55, near 12 o'clock, and then that little time crunch there about 11:50. So clear bullish indication at that point for people to get in that want to get in, because people are already talking about it, circulating news about it at that point, whatever the case like that, and the stock just went gangbusters, right? So it went from $3.35 a share all the way up to about $5 or about 60 cents a share, and about again about an hour, let's say 10:30 to roughly about, again, 11:40. So about an hour and 10 minutes. Beautiful gains on this trade here. Beautiful gains. Again, just being able to be, the data hounds, or scour the market like we always do, trying to look, search for some of these plays, checking the Twitter boards, checking your stock tweets, checking your Discord rooms, wherever you are. You got a scanner, utilizing the ability of it to work for you in the way that you should allow it to. And then again, you had a nice little print here where again you're going from 335 up to around about 550. So you're talking about based over 2 points in about an hour on a $3 stock. Really good money opportunity there if you were able to catch it, right? And then going to where we are right now, the stock is just flagging out to the sideways here, just flagging out to the sideways, still showing a very bullish sentiment, regardless of the fact that it's kind of pulling back a little bit here. Also, key points of resistance at this point around about $5.50 a share. Obviously presenting more of a lower high off the highs at this point, $5.42, but it's still in a very bullish manner coming off the lows here, above its VWAP, which is around about 471. So that would be my line in the sand, right? For anybody that's thinking about that, maybe still in it, right? And if you haven't taken profit at the more higher points of this stock here, that would be, in my opinion, again, my initial, as you can see, look at this, gapping down, trying to come towards it now, right? That would be my line in the sand at this point. If it breaks below that VWAP, meaning if it breaks below it and closes below it, then I would maybe think about, at that point going short, right? Obviously, it has to close below it though, because right near that you have a 200-day moving average that's coming up to a point where it seems like it's getting ready to converge here, right? And if it converges, and the VWAP obviously turns over and pushes the 200-day moving back down, then that's definitely the clear signal to go short on it. But if not, if the 200-day moving average crosses above that VWAP, oh boy, that could be dangerous, right? Or get to a point where it's trying to get ready to cross above it. That could be dangerous for anybody that's trying to short it, off those points around about 550, whatever the case, like the 542, because that can ignite a bullish frenzy and bring in a couple of new, buyers on the back end of the day. But either way, again, the stock made a great move on the daily, made some good money for people who was able to get in and benefit off the idea that, again, the volume came in at a very key indication above the 200-day moving average, was seen to be like a golden trade for those who was able to catch it. All right.
I seen that stock too, Oba, and I didn't even get in, man. I had to.
Oh, sorry about
Yeah,
that, brother Namex. Okay, go ahead, over.
I was trying to. I had to run some errands, man. I seen it
Mm-hmm.
right before I left, and I was like, man, should I just go ahead and get in it? And then when I come back, see where it's at. And I
Right.
didn't do it. I
Well,
was like,
again,
no.
you got to
Yeah.
trust, trust what you saw, being able to kind of map it out in your head, but putting it in fruition. Well, again, anything, again, like anything, the best thing you could do on top of that, when you saw the signal, would be turn bullish, set your little stop loss, right? Nothing else, throw your little stop loss in there, and depending on how many shares you have, you could do it kind of in a way where, you do what we call like a step down, right? A scaling out of your stop loss, right? So you would go down, let's say hypothetically for the sake of the training here, I don't know what time when you're looking at it, but just say when it breached above the 200-day moving average here, which caused it to be a bullish buy signal, which was obvious at that point, right? And let's say you got in above the 200-day moving average, say roughly around about 335, 340-ish, somewhere around there. Let's say within this candle here, 338. Easily, I would have set my stop loss again, depending on how many shares you got, right? All right. My first set would have been around, just me personally, around about 330, right? Because again, y'all know the market likes to kind of look at stuff and hold all, number one perspectives, right? So again, if I got in at 335, 338, I would have set my first stop loss around about $3.30, right? Now let's say if you had 1,000 shares in it, right? So 1,000 shares, 8 cents of a thousand shares is how much? Right? So you're talking about roughly around about what, 80, was that $80, somewhere around there? 1,000 shares at 8 cents.
Yeah.
Right? So you're talking about risking about $80, right? In a stock that would trade would it cost you roughly around about what, 3,000 and change. If you obviously went long at $3.38, if you bought 1,000 shares, at $3 stock is what, 3,000, whatever, $3,380, somewhere around there, right? So you'd risk $80, right? Just to your downside, in terms of that being my stop loss. I would have set that little stop loss if I had that mentality of risk in play in terms of my risk versus reward, right? And then rode it, because again, at that point you saw the volume coming in. Obviously, you can see down here where before it was like tic tacs. I hate when you see that kind of stuff on the chart on the daily, right? But that's just showing you that people are still undecided whether or not they're going to kind of trade the way they wanted to. But all it was just priming itself up to get ready to kind of blast off. As soon as it crossed above the 200-day moving average, which is an algo based, also institutional indication where institution traders or hedge funds or big money people that was watching this on their scan as far as the 200-day breach, indication for them to look at the certain stock when they kind of went off on their scanners. That was their buy signal, right? That was their buy signal. And after that, it was just gangbusters, right? It was just gangbusters, right? What's going on, family? Peace, power, profit, everybody in the back chat. Again, sorry I wasn't able if I wasn't seeing you in the back chat earlier. Again, when I'm going in a little bit, I can't see. I need to kind of pull my other screen up and kind of have an eye on the back chat so I can watch and follow, in tandem with you guys. But again, that was a clear indication. What's going on, Eva Camille? See the sister Camille in the house. What's going on, family? G Deb in the house. Brother Mathis in the house. Again, thank you everybody for coming through, hanging out with your brother. Again, thank y'all for coming to the new channel while we get the other channel kind of worked out. But y'all know how that stuff go, right? One monkey don't stop a show. We're gonna keep grinding, right? If I had to make another YouTube channel to be a backup to this, backup to the other backup, and we'll keep getting it, right? But for the most part, again, this was a great opportunity to kind of benefit off this trade. So again, watching it where it's at right now, it's still holding, like I said, quite nicely here. Again, it's great too because on Black Box, again, some of you guys know, may not know, I use Black Box as a scanner. Been with them obviously, since 2017 for a long time here. In my opinion, it's a long time, right? But we gave an indication on that stock around about $3.76, right? Again, a little bit, above that point where I was saying around about 335 when it crossed over the 200, point. That's when they saw, the momentum of it starting to build at that point for a bullish signal. And matter of fact, let me run over there real quick and just kind of show you a quick little overview of that. But again, it was just a telltale signal, in my opinion, based upon the fact that it crossed over that 200, which is obviously always somewhat of a bullish signal that traders look for when you have any kind of 200-day moving average breaches throughout the intraday as a potential, buy situation. So again, going right over here to Black Box, they gave alert. I say we around about 376. Again, I was looking at it more around like the point I was telling you around about that 335, 336, 337, like which was in this green candle right here, right? This big bullish engulfing candle right here. But either way, it proved to be a powerhouse play. So right here, as you can see here when it was priced at the alert at 376 on Black Box, right? And then at the high, it reached what, $5.60. So you basically, if you followed this alert, you would have picked up a minimum, let's say hypothetically around about what, 38%, somewhere around there, 38, 40, no, 40% off that call, because again, it hit a high around 560 off the actual alert itself before it rolled back over what you're seeing now around about $5.06 a share. This was a great 40% move here, right? 40% play if you missed it, again, at the point when it kind of breached above the 200, like I was saying, which would have put you rough around near about 45% on the day, had you was able to catch it, which is great money. Again, so you talk about, spending $1,000 or $3,000 to buy 1,000 shares, right? So let's say, 40% or 45%, or we'll just say for the sake of the training, 40% of 3,000 is how much, right? So 40% of 3,000, you're talking roughly, around about 100 and what, about $1,200-$1,300 in profit, right? Somewhere about $1,200-$1,300 in profit, in a matter of about an hour. Let that marinate, right? So that's a nice little bag on the daily if you took that kind of position, right? At that point where the stock began to kind of reveal itself as a bullish trade, $100 would have brought you 45, right? That's a nice little bag on the day. If you just spent $100 on this trade at that point of that breakout, again, about 40%, 45% in an hour, that's about $40-$45 in an hour on the clock if you was working for Mr. Charlie right now. Get excited, right? Get excited, right? So again, you have to look at the market in so many different aspects to kind of give you that kind of level of confidence, whether or not you want to, get long on the stock for certain reasons. Although we know it was running based on, I think it came out with a news release concerning, matter of fact, let's run over here real quick. Some of you guys may already know the news that came out on the stock, for whatever, is worth or whatever, but it began to be, something that a lot of people, when they got wind of it, they just, start crowding the trade. And that's when it just really took off again, as we was able to see there in terms of creative realties, right? So creative realties, obviously, it says realty, so it has to deal with something in the housing market, right? If nothing else, right? If nothing else. But again, again, it caught some favorable, bullish, sentiment, and the traders came in and just bought it up, right? They came in and bought that baby right on up, right? So let me go over here real quick, just kind of revisit that, see if I can find the news reel on it real fast. I should be typing it in, but I'm being lazy right now a little bit. Right? Just being a little lazy here, trying to see if anybody dropped it over here, maybe even on Stock Tweet.
Peace, profit, brother Emporium.
Hey, what's going on, brother Name X? What's going on, family? Peace, power, and profit. Thank you for coming through today.
Yeah, thank you.
How's your day going?
Oh, it's been going great.
Awesome, awesome. So you doing anything today? You trade anything today?
Yeah, I traded CBay.
CBay? Okay, so you call it CBay? All right,
Yeah.
Awesome. How's that work out for you? How's it go with that?
Oh, it was good for the early morning push, and then it flushed the rest of the day.
Then
And
flushed
now
after it. Awesome. Was you able to kind of get out, with some profit, or was you still riding it as a swing trade?
Oh no, I took my profit and then it flushed. It's
okay, nice. There you go. Right.
Yeah.
Good job. Way to go. That's what I'm talking about. Get excited, right?
Yeah.
Love it. I love it. So awesome. That's the only one you took so far?
Yeah.
Okay, great. So we'll give look at that one as well. Maybe you can break it down a little bit what you saw in it. Obviously beyond the fact that you made profit in it, obviously, right? But if you had any kind of key things that you saw that kind of gave you that that indication that it was a great great play, you definitely have the floor to discuss it, because again, in knowing how to replay your trades over or in your head or just in in general. It really helps you to become more confident in your decision making, right? When you're taking certain trades based upon a certain setup, some news, whatever the case like that, especially if it becomes a winner, it just ignites a person's trading prowess even more, so to again stay strong to their overall sentiment. Right? So just looking at here, CBay here. Let's say we go to the 30-minute chart. See what it's looking like. All right, just on GP. All right. All right. So can you see my screen here, brother Namex?
Yeah, I can see.
All right. You caught it. Well, you caught it. When did you caught it
In
earlier
the
in the day or
earlier in the
go
day.
ahead.
Yeah,
Early in the day
at the open.
at the open? Okay.
Yeah.
All right. So let's go to the 5-minute chart here. All right. Let's go to the 5-minute. All right. So we're talking roughly here. It's gonna keep going, maybe best if I keep going this thing 5-minute. All right, so 5-minute chart here, you can see what it did when it opened up at 9:30. You had a wick down roughly around about $4.11, $4.14, excuse me. Went up
Yeah.
and hit some resistance around about $5.58, $5.60, somewhere around there in terms
Yeah.
of the ultimate candle spike there.
Yeah.
All right, and then you start to hit some of the resistance obviously up that point and began to kind of trends ever so slightly near the VWAP at that point, obviously showing some fatigue a little bit early on.
Yeah.
Which is wild because you would think, the stock gapped up from yesterday. Obviously, we saw some of you guys might have caught it yesterday from 180. Obviously it gapped up around about $4.58 something cents, somewhere around there, trended sideways throughout the entire day. And then today, again, you can see the action here where it's kind of, trying to formulate, another particular trade or potential trade, or it's going to break down. We'll see here. So yeah, you want to explain your trade here? What do you see in it
Yeah.
here?
So on the 1 minute chart, what I saw was when the stock opened up, it broke the 200 MA and then finally reclaimed the 200 MA, and then I took it at like 200 shares at 431, and then all the way to 453,
Okay, so
all the way to 457. Yeah, and I sold.
all right, so let me go to the 1 minute here. All right, let's go to the 1 minute chart here.
Yeah.
All right, so again, roughly around about 9:30 here. All right, so yeah, so you say you took it here. Yes. Again, where'd you get in at? Where'd you get in at? I'm sorry.
So I saw it open up, and then it broke the 200 MA, and then
Okay, right here. Yep.
it finally reclaimed it, and then I took it
Right.
at 431, 432.
Okay, so right into this bullish candle right here.
Yeah.
Right, rough about 9:33. Okay. Yeah, again, that first pullback. All right, y'all know my little strategy when you had that first pullback, and that retrace. Obviously, in this case, you just used the 200-day moving average as an indication because it was a clear at that moment. And then when it claimed the VWAP here, again, I'm pretty sure that maybe gave you even more of a bullish signal. From where you were seeing it.
Yeah, it came the VWAP, and then I took it at 431. I got in at 431.
Nice.
$4.31, and then sold it at $4.57.
Very nice trade. Right?
Yeah.
Very nice trade. Again, I just drawn a little yellow bar here right at that point to around that 431 area, which is great too, because again, if you look at that, all it did, like you say, like I think we talked about this in one of our training sessions. Anytime you see it breaches above the previous high candle, or at a pivot point where you have a lot of buyers in it, because that's a pregnant bearish engulfing candle there. That means there's some real buyers or sellers in there, and it breached above that was a clear indication at the point to turn bullish, because it crossed above that point of resistance here. Even though we crossed the 200 in the VWAP, that was another bullish signal. So you got long literally at a very, very favorable place here. Kudos to you here using that as a point of price discovery on the daily chart. Obviously at that point, because it closed above or pushed above, excuse me, at that point where it closed here. Right, and then again came back ever so slightly, tested it here. Nothing to get really too alarmed when it came down and hit like 429, 430ish, because the buyer still was in, because look at this bullish engulfing candle here. This is beautiful here.
Yeah.
Right. Again, you had about 429, 430 up to 430, about 10-cent move in this one candle here, in this 1 minute candle here. That's the kind of money I love to see right here, and in these kind of stocks that's trading at this price. Right, that's a 1 minute candle, a 10-cent print. Right, with a leverage account, guys, or even just you trading it, with the strength of whatever you got. That's a good bag right there. Right, that's a very great bag. And then right after that, again, that's when the fireworks really went off. I mean, look at that big bullish and green, engulfing green candle here. Right, again, you're talking about basically what 440 all the way up to like near 460. Yeah, that's a 20-cent move. Right, 20-cent move in 1 minute. So rough, you're talking about 30 cents in about 2 minutes.
Yeah.
Right. Y'all know exactly what that's like in terms of a day trade. When you day trade these stocks trading at this, this multiple, this price point, that is a good bag. That is a very good bag. Right. Let me tell it.
Lovely bag.
So, yeah. So kudos to you, brother Namex, for taking that trade again. again, being able to explain it, which is great because now, again, what that does to you, it kind of validates, your position in terms of what you saw. Again, you're not having to kind of feel like, you was chasing it for any kind of odd reason. You was able to kind of put a schematic together, a game plan, and you utilized it thoroughly, again, professionally, and you benefit off of it. The markets reward you for it. So again, shout out to you, bro, for that awesome trade there, man. And again, just kind of watching here on the back end of the day, again, like you saw at that point, whether you notice this is going to happen or not, but the turnover when they have that bearish and go for candle, it hadn't recovered since then. So you got a little movement coming off the double this dead cat bounce or double bottom here, but we're talking about obviously after 12 o'clock at that point, and the markets began to kind of spaz to the upside a little bit when the SP 500 took off. So this is just more of a correlation play at the back end of the day when shorts probably covered off this deep pullback, and they ate off of it too. Again, you're talking about from $4.60 all the way down to $3.46, so well over $1.20 print, $1.15 print. From the highs to the lows on the intraday session, which was great money even for the short sellers too. So everybody fed off of it. Bullish traders fed off of it early on the in the pre-session spike. Well, not necessarily pre-session, meaning pre-market, but that first 30 minutes of trading in the market, and then after that, the bears took over and ate, and then some bulls came in on the back end of the day after some of these bears covered off, and they still eating off the back end from around about 350 up to around about 425. So roughly around about a 75 cent, retrace on the back end of the day, which is still good money. That is good money on the back end of a day session where you still able to get 75 cent level of expansion. Again, the market crossing over the 200-day or the 20-day moving average here in CBay at this point, and then the volume came in literally right after that. At this point, because look at this big green candle down here on the volume side, where again when it kind of crossed above it, some people got more excited about it, maybe, who knows, and after that they pushed it. So great trade, bro. Great trade. Kudos to you, man. And I love that. So that's what I love. Again, when people can come on and explain their trade, what they're looking at, what they see, how they value the market, things of that nature. It matters, man. I tell you, again, that's why it takes having, people you can kind of, conversate with or share your ideas with, your trades with, your technical analysis with, whatever the case, your fundamentals, to get that second opinion, second voice. Sometimes if you just, kind of took the time to kind of really analyze your trades, right? Giving you that moment. Again, y'all know I use a little four pillars of success in my little mind called the what, why, where, and when, right? What you're trading, why you're trading it, where you're trading it, where you want to trade, when to pull the trigger on it. All right. Again, if you can answer three of those aspects, of that kind of fundamental technical overview, then again, take the trade. If you cannot answer three of it, don't take it. Sometimes it's better just to watch it, see if it unfold, than to kind of be unsure.
Yeah,
right. We want to be thorough. So kudos to you on that. Right?
Yeah, I think it has this catalyst. It says Cambe doubles on panel as no liver injury in NASH drug study. So now I don't know if it's gonna keep going higher or it's gonna tank from here.
Right. That's why it kind of became relevant yesterday. Again, when it gapped up from 180 all the way to 140, people were like, "Oh, this is on." Right. I didn't touch it obviously yesterday. I wanted to. I was like, "No, it's just extended out the gap up." Right. Again, going back, previous chart here. So what do you see? Right. There ain't no price discovery going back a good little ways. Matter of fact, let's go back to let's go to the 1-day chart. Right. So it hadn't been back in these areas for quite a while. So if you go back, hold up. Let's condense it. All right. Let's condense it. It hadn't been back in this area since it kind of sold off way back, back in the 2019 region. So roughly at this point right here, at about $5.33 here, obviously when they had a massive gap down, went from 5.33 all the way down to like $1.25, right, around about November 25th, right, November 24th and November 22nd to November 25th. Again, ugly gap down there. And so basically all you had here with it was kind of bottoming out, right? Hadn't been this low again since going back to 2016, right? 2016 was down like $1 and some change, $1.20, right? And then again, that news came out like you just discussed there, which I saw it too. And they had a massive gap up to try to come up and try to fill some of that gap. It didn't close the gap, but it got, at least a good 80% of that gap back, which is great, being able to close or fill it, which would be very, very demonstrative for this stock, based on this news, which could be very, very bullish going forward for the stock, and coming off of earnings. that may also again show for another potential opposite, buy for people that may think about, getting in. And I'm saying again, if it's above the 200-day moving average, which is roughly around about $3.50, could it pull back and test that again? Possibly, because you got a wick. You definitely got a wick there. You definitely got a wick right there, right, on today's intraday session, which is today. And that, in that aspect, we'll see, right? We'll see if it comes down to test that again. To take a long position here in the middle, I would have to see how the day closes out, right? Because it's in between what they call the, no man's land, purgatory, so to speak, right? To be just aggressively bullish on it at this point after missing the gap up from here, right? So it'll be more of a day trade than in the in this aspect of filling the gap up near 530. I still need to see if it wants to test this 200-day moving average again. If not, well, let's see if it breaches above what the high, which is what 5 what was it 460, somewhere around there. Then we could think about barbecuing, right? Then we could think about barbecuing in this stock, right? If we get back above that pivot there, which came close to it here, 590 on the 12th yesterday. But today's session, again, you're talking about around about 460, right? So we would have to clear that 460 bar, right, to really say that, okay, I can add something for this for a long, another long play into that 530 resistance, that gap closure at that point, I should say. But other than that, again, great trade, bro. Great trade again. Can't stress that enough, man. So, again, that's what we're talking about in terms of understanding, how to take advantage of some of these plays that had, a momentum coming out of previous day session. Because that's basically what that was, where it kind of gapped up, pulled back into the close yesterday, opened up again today, with some fresh money still, feeling like, we still in a good spot because of that news reel, right? And they traded it, thoroughly into the the opening session to a degree where it kind of hit some resistance, and then it rolled over after that. But that's great money out the gate. That's some really good money. That's when you say, when we say, most people are done in the market in the first 20, 30 minutes of trading. Then it takes a person to work an entire day on a clock, right, or on the shift for Mr. Charlie. This is exactly how you do it, right? Especially with a leveraged account scenario, right? A margin. I mean, you're talking again roughly about like which kind of itemizing here. From 430 to 420, 430 up to like 460. I mean, that's a good, nice little bag right there. Right? Good little 30, 40 cents, 30, 40 some cents worth of, profit in that perspective. Right. So again, this say 1,000 shares would have cost you roughly around about $4,000 and some change. Right. And you picked up what, 30, 40 cents or 40 cents off 1,000 shares. You're talking roughly $300 to $400. Right. In a matter of what, 5 minutes, 10 minutes, somewhere around there, 10, 20 minutes, if that. 10 minutes, about 10 minutes actually, to be exact. Roughly about 10 minutes, 5 minutes to 10 minutes, I should say.
Like 6 minutes, I think.
For you, it was like, 6, looking at the point where I think you got in, especially looking at it on the 1 minute chart. But again, you can't make that kind of, those kind of gains nowhere on the planet, right? With that ease of opportunity, given the opportunity when it presents itself, it's just crazy. Again, so 1, 2, 3, 4, 5, like you said, 5, 6 minutes here. Again, that's the $300-$400 in that perspective. Again, using 1,000 share perspective, right? Using 100 shares, again, 100 shares still brought you around about what, $30-$40, right? So that's good money, right? That's good money. So 400, $400, you can get about $30-$40 out of that, somewhere around there, give or take. Again, you them Uber Eats, your DoorDash, that paid for a nice little meal for the day. Right? So get ready to look at it. So awesome. So good job there. Right. So again, just kind of going over, the market in a way where, we having to, utilize, what you see, or what we're looking at in the markets in terms of how that affects, our ability to be, proficient in the craft of knowing, what we're doing day to day. You have to have a plan, right? You have to have a plan. I repeat, you have to have a plan, and you have to stick with it, right? And you have to be able to stick with it, when it's game time, right? And if you get what they call cold feet, right? A cold feet or die of temptation, or whatever. No, what's it called? I forgot what the other stuff. But yeah, you get, cold feet. Don't take the trade. Again, if you can't justify it, for the reason, at the point where you lost your confidence in it, don't take it. Right. So again, S&P 500, like I said before, still below the 200-day, not 200 moving average at this point. It is, but below the support bar that we had set in place here on the back end of the day. Like I said, it depends on how it trades here on the back end of the day, whether or not we have that continued, flush out here, going into the close. I think the sentiment is still strong to the downside. Me personally, again, breaking below this point of support here. So a lot of your greater stocks out there, again, like your Apples, your Boeings, and many others too that are actually rolling over today finally. That will also cause more problems in the back end of the day if they actually even pick up more steam. As you can see now, you see the Dow, but the SPY really starting to show a little bit more some selling here a little bit. Here again at the 235 hour, where you're starting to see some extension on this little 1 hour candle here. If we go to the 5 minute, I'm pretty sure it looks a little blotchy, but it's looking really good here on the 1 hour here time frame for more downside. So even if a person wanting to come in late in the day and scalp the market here, on the back end of the $200, the 200-day moving average, breakdown, but more importantly, even this breakdown here of this line here and testing it for a scalp around 281, somewhere around there. Right now, you're kind of riding that wave a little bit here still. So, the trend is on your side unless they flip it. Again, we know they can do it. We talk about, man, a very radical Fed, right? Jerome Powell, again, talk about that guy, right? Again, as you can see out in my description box, today is definitely a day to kind of put the Feds on blast because, again, watching Jerome Powell come out and kind of use that same, narrative talking point that he's been so successful in over the past month or so, that they're going to be very accommodative. It just necessarily didn't really ignite the market today because it already had broke below some very key levels in terms of support. And so the energy and the sentiment was always still down, was still to the downside, as I'm saying. It was obvious at that point. So again, so if you didn't catch the news, again, it was pretty much, idea where, again, that Jerome Powell, he warned of extended period of weakness and growth and stagnant incomes, in the overall market. The idea that, he's, not necessarily considering going to negative interest rates as of yet. Doesn't necessarily mean he say he was, that is just completely ruled out because he didn't speak with that kind of level of inflection, or inflection of tone. And that's what really made the markets weak too, because again, y'all know that if we ever even get to a point where we go into negative rates, it's gonna be lights out for this for this economy. We will definitely go into a depression if we go to negative rates because we dumped too much ammo into the markets too soon in terms of the Federal Reserve going back to September 2019 when they were just throwing good money away at a market that didn't necessarily need it. And because of that, they dug their own grave, so to speak. And now they're backpedaling hard now. They reap the benefit of riding through Gravy Valley on biscuit wheels, ever since the month of, again, September 2019, just using taxpayers' money to kind of prop the markets up. And again, the market could do no wrong. It just kept going up on nothing, right? No organic growth, no nothing. And now that economic headwind is coming back to bite them behind it because the first thing to give way to show that weakness was the bond markets, right? When the bond markets crashed, back on the latter part of 2019, we began to kind of really pull back, right? Especially in the 2020, it was an obvious key indication that we were in trouble, right? It was a key indication that we were in trouble. No matter how much money they were printing, it wasn't enough, again, to really turn that ultimate unraveling of the debt market and the credit market obviously being able to show that it had holes in it, right? So again, that's what happens when you try to follow suit and follow the other central banks like Europe, the ECB over there in Europe, and then obviously the Central Bank of Japan, which is, the poster child for what happens when you go to negative interest rates, and then your economy suffers greatly afterwards, right? They've been at negative interest rates over there, and they've kind of been suffering ever since, and they still haven't dug themselves out of that hole, and they still printing money, right? The central bank over there named what is his name, Kuroda, right? It's funny to every time I see little memes of that guy, it just make you just crack up laughing. Little funny looking little Japanese dude, right? But every time you think about their economy, it's just that's the poster child for what happens when you go to negative interest rate, right? So America obviously followed suit because Trump kept pushing the Feds to kind of lower interest rate. Now you did it too fast, too soon. When at the aspect or the advent of that, everybody kept saying we had the greatest economy of all time. And I say everybody, meaning what the administration, definitely was big advocates that we had a strong economy. And we know that turned out to be just not true, because as soon as we hit this coronavirus situation head on and we went to a shelter-in-place perspective, what happened a week into the shelter-in perspective? Everybody crying that guess what? They ain't got no money. Like how? You just had the so-called the strongest economy in the world, and you couldn't even endure 1 week of being sheltered in, right? That mean when the sister was like the lies, she was waving her hands up, the lies, right? Obviously they were lying. Right? And this ain't nothing to do with your political affiliation. Sometimes you just got to deal with the truth, the raw fact and the truth, right? Because I always tell people numbers don't lie, right? So the numbers show a totally different picture than what they were saying. Because if it was not the case, the market wouldn't have sold off the way that it did. In a discussion, you can't make excuses for reality when you see the numbers are starting to kind of print in a way where you're starting to see the unemployment numbers obviously picking up. All that stuff began to kind of really be, show itself as a major problem. Now all of a sudden is that now you need all this help, and you didn't kind of unload all your bullets at a time you didn't necessarily need to unload your bullets. I was talking about that way back in 2019, early 2019, like Q1 of 2019 in fiscal. If y'all go back and look at some of my old live streams back then, I was like, man, they're doing too much too soon, right? All this unload now ammunition this soon in this market, and they don't necessarily need it. This is going to be a problem on the back end of this year. I mean, in 2019 going into 2020, I could go back and pull those live streams up when I was telling y'all that we're going to be in a recession by early part of 2020. And I was saying that around the end of 2018, going into the first part of 2019, I said, there's no doubt in my mind that we're going to be in a recession going around about the first quarter or second quarter into 2020. And here we are. Now, I didn't know the coronavirus was going to happen, but I just was going strictly off the economic, the macro data, coming out of the idea that the Fed was obviously at that point starting to lower interest rate and necessarily didn't need it. They was doing all that for this kind of, massage in the market based upon the tariff and the trade war issue that Trump always brought on the economy at that point. So it was self-inflicted. It wasn't nothing naturally that happened. It was a self-inflicted perspective that he brought on in terms of that war. Now, I'm not going to say it was bad or good that they did this trade war scenario. If you were looking at it from the aspect of you feel like China owes more than it's been given, who knows? But they did it in a very messy way. And so because of that, typically what happens is the economic markets are affected by that. Supply chains, y'all saw what was happening. They were threatening companies to get out of China, or they gonna get taxed to heaven. This was coming out of America. Trump was saying that. It wasn't even about the idea that the Asians were saying it. Trump was like, there's no reason why y'all should be in Asia right now, or China, manufacturing goods and services. So he started threatening with ultimatums, all that kind of stuff. It was just messy, right? Y'all remember it. But either way, all that stuff obviously came back full circle 360, and now it's starting to reveal the major weakness in the market, right? At a point now where we're starting to realize that stuff is again boomerang in the market, right? What they call a boomerang dagger, right? Some of you guys know us over there from the dagger squad. When we use that term, a boomerang dagger, they dagger themselves, right? You threw the boomerang, right, with some razor blade, think you're gonna hit your opponent, right? And that thing came back and got you. And that's basically what happened, right? The economic headwind seemed to be a little too much. And what do you see now? Obviously, we just talking after the fact that the market's pulling back off the March lows around March 20 when it ran up by 30%, hit that resistance around the 200-day moving average on the daily chart. But now you're starting to see that weakness coming to fruition, where those numbers, those macro numbers, are starting to reveal this, the overall, the overarching weakness in the market, right? The overall arching negative value that's starting to show that there's some things that we still have to reckon with. That again, the irrational exuberance of the market, right? The irrational exuberance of the market that caused it to go from basically down here to way up here in that little bit of time on no necessarily real true economic bullish news, just a whole lot of hopium like they've been doing since all 29, just probably the market up on taxpayers' money. It's starting to show weakness now. So again, you see my big overall arching little regular yellow line that I got going up there. And here we go. Right now we're on the downhill slalom, like the Jamaican bobsled team. Here we go. Right, we're on the way back, downtown. They said we're on our way downtown. Now, again, I'm not going to give you that indication that we're just going to keep flushing, right? Right. But I will say this here. Right. Again, we know that you got some key level support that we got to kind of break below in terms of definitely around, let's say even 279 from there. Then you got 277, 63-ish. After that, you got a gap that has to get filled still around about we spoke about this yesterday, 274, somewhere around about 274-ish, right? Again, if we close below 280, if for the fifth, we all be drunk, but if we close below 280, we get excited, right? Get excited. 274 will not be out of the picture, right? 274 will not be out of the picture because we have a lot of expiring contracts for this Friday, right? That was extended for some of them 2-week, option contract, stocks like that will definitely close out for people feeling like, the market's obviously starting to kind of roll over and they're going to take what little profit they already had or that they obviously losing at this point. They're going to get out those contracts and take the little pennies if they can, right? It can get real messy to the downside going into Friday. And I'm saying that because that's the actual date that the country is supposed to open back up, apparently, right? On a Friday of all days, right? But again, who wants to hold the market going into all that uncertainty, right? Because American people are not talking confident about going back to work the way that Trump talking about opening the country back up, right? Open the country back up for them means I just want to be able to go to the parks and, go do stuff like that and go. That don't mean I want to rush back to work. And that's where they keep conflating the idea that people, want to open the country back up. Them people ain't talking about going to open the country back up so they can just go straight to work and catch their corona. They want to open up so they can just go to, national parks, right? They got the bands at the national park. People can't go to them, right? They can't play basketball. See, people want to be able to do stuff like that, right? They want to be able to do that, but just going straight back to work, no. Right? Again, that's just my opinion, but y'all know how this stuff go. They be double talking, right? They be trying to get people, riled up like they just want to go back to work. No, I'm joking. Like, no, cut me a check and I'll sit at the house and just go to the park and hang out with my family and play golf, go fishing, stuff like that, right? Propped up these failing companies for so long when they crash the economy. Why not give their money back to the American people? It's their money anyway, right? And that goes right into this no $3 trillion bill that the Democrats are pushing right now. This new so-called stimulus bill that they put forth today that the Republicans, shut it down, which we knew it was going to happen. They shut it down quick, right? $3 trillion new bill, and the Republicans shot it down. And that also caused the market kind of sell off a little earlier today, too. I don't know if y'all caught that. But Nancy Pelosi dropped that bill, and guess what happened? Republicans shot it down like they was, right? Like they are. Again, two heads of the same snake, Republicans or Democrats. No matter, don't get all in your little feelings about your little political part, but y'all know what's going on there. They playing around with y'all money. They dangling carrots in front of y'all face, right, for votes, and they know y'all need what y'all need, right? Because again, nobody running to the recovery of the Main Street people right now. They just constantly keep bailing out what? Wall Street. I mean, it's obvious at this point. It's obvious at this point, right? It's not even up for debate, right? Because we can go look at all the outflows. We can go look at all the stimulus packages that's been going into the stock market in terms of the Federal Reserve print money. All that money been going into equities. And yesterday, outright out of the Fed's mouth, they pretty much told y'all they finna actually start buying what now? ETFs. They finna start buying the market right now. And I told y'all we was gonna go to that point sooner or later. I was telling y'all that. I said we're gonna go to that point sooner or later where they're gonna be buying stocks outright. Right now, they're doing it under the guise of the repo reverse operation, giving these banks these major swaths of cash to dump into the market by way of the banks, right? BlackRock, JP Morgan, those are some of the exchanges or the institutions that they're using. Again, you can put this stuff up. I'm not making it up. Those are some of the lending banks that they're giving that money to in terms of the repo market. But again, all that stuff now is becoming more of a headache, right? It's becoming a headache, all right, for Jerome Powell because he realized that he went too far too fast. And when you go too far too fast, the markets don't naturally correct or expand at the point that takes a natural, value of markets to kind of, absorb news and information, right? It can come back and hurt you, right? So today's repo operation, right? The session for this morning ended at 8:30. How much money went into the market, right? This is why the market kind of turned over. They only put $1 billion into this morning's repo operation. $1 billion. What happened, between 8:30, from 8:30, let's say, up until roughly around, let's say, 10 o'clock, 10:30, somewhere around there. The market was on a steady downtrend because they had no meat, right? They had no money to give, right? They came in a little later, afterwards and tried to turn it, but that money came on the back end of what? at 12 o'clock. They waited methodically to dump this last 13 billion, which is what this is, 13 billion here, into the stock market. That operation ended at 1:15 p.m. Now let's go to the chart. I'm going to show you how this stuff works. Right? Let's go to the chart. Right? Let's go to the 5-minute chart. Let's go to the 5-minute. Right? Right here. I got to show y'all this, Brad, because that 12 o'clock time frame always is a great indication of the foolishness, right? So you go to the 1-minute chart on the SPY, right? So rough around about 12 o'clock, 12:10, you saw it kind of breaking down. Rough around about 12:15 into 12:20, right? What happened? Retrace, right? Income large swaths of cash. Now, even though there could be shorts covering too, but these people are smart. They know when shorts are at a point when they start to recover, because you can see the the orders coming in on level 2, right? And the dark pool. So they just came in right on the end at the point where the short start covering, right? And whatever money was left out of that 13 billion swats of cash that had to get filled by 1:15 p.m., they bought the market. Look at them big, them big bullish engulfing candles right here.
Sorry,
Y'all
I can't
think
see
that's
your
retail?
chart.
Oh, y'all can't see it? I'm sorry. My
Yeah.
bad. Hold up. Wait a minute. Hold up. Wait a minute. Oh, okay. Yeah, it's still showing that the repo operation. My bad. I forgot. This thing don't change when you change. All right. So 1 second. Right here, right. So right at this point here, what happened? Right. Look at that big bullish engulfing candle here. Right. They saw that again. J.P. Morgan, BlackRock, those people saw that, and they what? They dumped the rest of that 13 billion that was left out of today that they tried to use after 8:30 to try to set, prop the market, save wherever they could. It didn't help, obviously, and they dumped the rest of it, and the market went from basically what 279.70 all the way up here to around about what 282 and some change, right? 282 and some change. A great $3, retrace. Again, they kept trying to buy on the pivots, as you can see here. Whatever the little bit of that money that was left over. Oh, excuse me, at the 115 into 115. What 115 at? Right here, basically right here. So let me see if I can. Where is it? Hold up, dang it. Where is the? Where is the box? Come on, man. It's I hadn't done that box in a while. I just do this one here. It'll still print it. It'll still show it. All right. So to this point right here. All right. So 115. Yep. All right. So in this little box, I know you can see it. It's faint. Let me see. Let's change the color. Let's go. The color ain't that much better. All right. Anyway, y'all see it enough. All right. So in that box there, again, that's what the last tranche of cash that came through in the market, right? And so again, you can see they tried to get off the lows, keep it from what flushing lower, because at that point that was a key moment to try to save it, right? Whatever money they had left over, they tried to save it with. And then going into 115, right here, this candle right here. Seriously, y'all know what kind of money that is. Y'all know who money that is, right? That was the last tranche of cash. They threw that last little bit of money into the market at 110. Whatever they had left, they just threw it, right? It's like being at the strip club, right? They get ready to close the door, and that last little stripper trying to get that last little dollar, she still get it in, right? And you just come in, you can have it all, right? You throw a big wad of cash up there, right? And after that, they still shut the door and kick you out the club, right? And they weren't gonna keep the DJ playing no more records at that point, because after that, what happened? It pulled right back, pulled right back down. Obviously, had a smaller tracement there, and now we get ready to close, closing lower here on the back end, but that was that last little tranche of cash, right? That was that last tranche of cash in the repo operation. So today was a very weak repo operations market. And I'm saying all that to say this. That's why you had the level of flushing happening in the market today. As you can see here, that's very demonstrative, because there was no money today, right? It wasn't enough to stop the outflow. They was not going to risk throwing away, the kind of money it was doing earlier, let's say 3 or 4 days ago, a week ago, into today's session, knowing that the algos already had the mandate to sell the market off, right? That was so the money they used today was just to pretty much stop some of the bleeding, right? Try to put a band-aid on it a little bit, not stop it all together, but just put just slow it down just a little bit here, right? a little bit here, right? And after that, lights out, right? After that, it was just lights out. So again, we're looking at this thing again from a very, very, plausible situation where we know that we have a major breach. We have a major breach at this point, right? And we're getting ready to show some real weakness, right? So again, that little dump from that perspective, when we did that little box, that was about a 1.2% drop, right? $3.41 point move in that little small time frame to the upside, and now back to the downside. Excuse me. So again, major weakness there. And so we'll see how this thing going into 3 o'clock. We're getting ready to come into the 3 o'clock hour at about 5 minutes from now, where the market's going to go. Because they're doing everything they can now to keep this thing above 280. That's why it's fighting here within this 1 hour chart, this 1 hour candle here. It's fighting. But it's, again, bulls are losing because it's closer to the lower end of this candle than it is to the higher end of this candle. So the bulls are losing, right? They're giving way to the bears at this point. And if we close at 280 or below 280 going into the next candle, or close to 280 going to the next 1 hour chart, 1 hour candle, excuse me, it's going to get ugly potentially into that 330 point. Because if the market's going to turn at any point, if they're going to try to turn at any point to try to save the flushing from happening, it's going to be between 320 and 340. I got a feeling like I've been watching this market every day when the algos begin to kick in from the repo operations for the next tranche. They seem to always try to buy the market between 320 and 340. And if not, they'll try to do it around about 350-ish, 355-ish. They'll try to come in and sneak in a little extra on that back end of the day.
So are you saying that they dumped the whole 13 billion into the market?
Yeah, that's how the repo operations work. Yeah, that tranche. I know you kind of linked to some of our lives when we've been talking about the repo operations.
Yeah.
But that's what the operation that's been happening since September. Well, we know it's bigger than that now because they just been printing money like left and right. And they buying bonds, they buying the junk bonds, they buying muni bonds, they buying mortgage-backed lending bonds. They buying all the debt in the market right now, which is actually illegal. In certain cases, some of the junk bonds they're buying is illegal under the framework of the Constitution aspect of the Federal Reserve that they need to follow, because you can't monetize debt, right? Because basically that's like stealing, right? You're stealing from the American people at that point when you're monetizing debt. But again, a lot of people ain't really. How can you question the Fed at that level when everybody's caught under this kind of level? And who's gonna take them to trial, right? And they so crafty with it, they find ways to kind of hide it and disguise it under different aspects of the market. So they say the repo reverse operation. Well, they know what they're doing. They're basically taking that money, which is taxpayers' money. They print it digitally, give it to the people like BlackRock, JP Morgan, banks, and the banks do what with it? Supposed to lend money out for people that's trying to get loans and credit, and the rest of it they do what? Put it in the stock market. Now, banks pretty much came out and told y'all outright, literally, that they ain't even really loaning the money under the stimulus package out to people the way they're supposed to, basically because they scared that people going to default on the loan. But it ain't their decision to make. It's money that's taxpayers' money that they're holding in hostage. So they want to take that money and they want to do what with it? Buy what with it?
Buy stocks.
Exactly. Right. So again, they running a dirty game, but it's unconstitutional that you monetizing debt. You should not be monetizing junk bonds. They're junk bonds for a reason. That means if they went to the junk bond status, that means they was what? Fiduciary irresponsible to their shareholders and their company, and because of that, they went under. How can you? They don't bail you out when you miss a bill or two. They don't bail you out. If you having economic headwinds and problems, do they come bail you out?
Nope.
No. Right. So how you get to bail out these corporate companies? How they bail out these corporate companies? Because they know American people have short memories, and they don't understand that. Again, they vote against their own interests. They are complicit in propping up failed companies that benefit and make billions and millions of dollars off your tax dollars, and then you still go put these same charlatan politicians back in office to turn around and do just what? Just that again. Earmarking slush funds and pig and extra pork into these certain stimulus packages that give it to certain interests that necessarily don't reflect your overall need.
Yeah, I was just looking at the St. Louis chart too. It doesn't seem like they did much today. They didn't put enough money today.
Right.
For the St. Louis Fed.
Yep. Yep, we talk about that one a lot. We talk about that one a lot over here too, because those are the two you always want to watch. You want to watch the St. Louis, and you also want to watch the New York, right? So you look at the St. Louis. Well, what do they do over there in the Lou today, right? Or some of y'all know over in the St. Louis area, right? We call it the Lou, right? Right. What they do over there in the Lou today?
I think probably only like 500 million, I think, or 50 million.
24. They had 24. No, excuse me, that's yesterday. Hold up.
Yeah.
I had to let me refresh my screen. I'm still stuck on yesterday.
Yeah, you have to refresh.
Let's see what the Lou did today. Actually, a big outflow. Ha! Look at that outflow. Y'all see that there? Look at that outflow right there. Outflow. Yesterday, 24 billion. Today they did what? 500 what? Million. No money, bruh. Look at that straight line down. Again, I remember I showed you that on the earlier tranche, 8:30 operations. It was on, that little small amount they had, and that's why, wasn't a whole lot of action happening in the session where the market opened up and it was showing weakness because they had no light sport. It had no crack cocaine. It had no methamphetamine. It had no drugs, right? So the Bulls drug dealer was absent today, right? Jay Powell was late today. He showed up, bro. He's like, y'all on y'all own, bro. I got to do this interview today. Y'all on y'all own. And then the Bulls walk around like, scratching their little neck and scratching their shoulders. Y'all got any more of that crack? Y'all got any more crack? Like Dave Chappelle, y'all got any more of them gains over there? Y'all got any more of that repo money? And so guess what? It showed in the S&P 500. Couldn't make this stuff up. Could not make this stuff up. Again, that's why I always tell people, look at every aspect of the market that you possibly can. Don't fall short of trying to check every nook and cranny you potentially can to give you the best resolution that you need to help benefit you in making the best decision for your trade.
So what do you think? 80% fundamentals, 20% technical?
Well, yeah, basically, at this point, shucks, it's about, yeah, I would say I use that. I've been thinking this so raggedy right now with the Feds buying the market up. I mean, it's kind of like a given in some cases, before today, the last couple of days when they hit that 200-day moving average and it's rolling over now. But, definitely, again, that's the basic criteria we always want to follow. But even within knowing that, you want to keep your eyes on where the money's at, right? The money is dictating to you how the market's going to respond on an average basis, where it's benefiting in a trend. And it stacks to hitting point where it's starting to hit some resistance in a trend that might have been, it's been riding away for like over a few weeks. The market been on a surfing party over the last 2 weeks. I mean, the market seemed like it was just up every day. I mean, it gave bears no comfort. And now you're starting to see a little difference, right? Now we're starting to get some fall through for bears on the back end, and we're starting to benefit from it, right? So again, income 3 o'clock, just like I said, at 3 o'clock, they always try to do what? The algos kick in.
They're pumping it now.
Look at the 500.
Wow.
You see it? Yeah. There we go. Here we go. 3 o'clock. Let me get over to that chart real quick. Let me get over to that beautiful beam footed. Here they come. Them algos. Right. Algos on, like at the end, they don't take days off when you got the, look at that.
Wow.
Look at this here.
Look at the volume bar.
All the way from right here, right from about 280.15, all the way up to 281, 223. Look at them criminals. Look at them criminals.
Wow.
Look at them criminals trying to save it. Look at them.
Bullish engulfing.
On a 1 hour. I told you however they open up that next candle, we're gonna be very revealing.
Whoa.
That's what a person that just don't want to give up. That's exactly what these people is right here. They just don't want to give up. I mean, and I'll say they, meaning it ain't retail. That's institution money. That's that repo, reverse operations. Those that institution money like BlackRock, whatever they had for the next trunk, they dumping it. Soon 3 o'clock hit, it never fails. Income what? A blast of money out of nowhere.
Oh man.
It's a waste. It's a clear waste. That's what's sad about it. It's a waste.
So they already
throw it away.
They already spent the 13 billion, and then this one is extra money.
Well, it's for the next tranche going into the next day.
Oh.
That operation ended. That operation already ended at 1:15 of that that tranche. So if you go towards God, hold up, let me see. Go over to blah 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 blah. Where we at? All right. So let me refresh. So you can see they actually got the printout showing you what the operations are going to look going into the next days and all that stuff, right? So this is the 13 billion. So this is the part of the 13 billion, right? Or the let me see operation. Yep. This is the part of the 13 billion. I was wrong. I looked at it wrong. I forgot it was Thursday. Maturity date is at the 14th, right? It matures on the 14th. So this is part of that 13 billion tranche.
Oh,
right?
I see.
That supposed to end out tomorrow. I just got ahead of myself. That's all. I just got ahead of myself, right? But that's exactly what it is, right? So again, it's just showing you that they're gonna do everything at certain key intervals to try to turn the market. Because again, keep in mind they're just doing support resistance too, right? Weakness, strength, the same way we look at the markets in that perspective, right? So again, it's gonna be good money thrown away. Because I think the sentiment is still strong to the downside, regardless. But you're not going to stop them from trying, because guess what? Basically, in this moment, the market makers in tandem to the banks that's dumping a little bit of cash into the market. All they're trying to do at this point is trying to grind out the rest of the put buyers that bought puts for today. That's going to expire today. Keep in mind, there's a trunk of SPY puts that's going to expire today that they bought on the 11th. So they're just trying to stop those guys from making even more of a killing than they already made. They're trying to slow the bleeding. So you know how this stuff go, like I was saying. But it ain't gonna work. It ain't gonna work. Yeah. But they gotta try, because even you had that kind of outflows coming in or inflows coming back in. That decays some of the theta, right? Because it's a stagnation moment. It's killed some of that liquidity, and so that theta burn hit you a little bit more at that hour, that 3 o'clock hour. But again, it's short-lived to a degree. As you can see, it's still trying to fight. Again, people selling into it. Come make this stuff up. They're selling right into it. Look here.
Oh man.
They're selling into it. But again, you can't fault them. You know they're gonna try. I mean, y'all know the deal. Y'all know who y'all dealing with.
Oh my God.
Right? Y'all know exactly who y'all dealing with. But all they did is sold right into that. So you want to run it back up? Okay, we're gonna short. Right? We're gonna sell into it then. Right? Or somebody's finna scalp a put on the back end of the day until about the next 30, 40 minutes, they bought a put right away, a SPY 280 put or a 281 put right at the 3 o'clock hour when it kind of got started back up. I mean, you couldn't make this stuff up. That's literally how you day trade this trash sometimes, right? I've done it like that, and I'll pick up a quick little 30, 40% in no time, right? And I'm like, okay, see, that's what I'm talking about. Get excited, right? And but you have to be, again, within the sentiment of when you've seen that shift or the weakness of the trend and benefit, based upon, with the overall, I would say the energy of the market was already heading at that point. Even when you have a small little stop and pop retrace, people just sell right into that like it ain't nothing. And so again, good money going to waste. Now, a good portion of that money, however amount they use, they could have gave all y'all at least 30, 40 bucks. You could have been eating lunch right now at DoorDash, right? Getting some cheesecake. It came out better being in your pockets, right? Than going to try to stop this bleed, right? There you go. That's it, right? Raul, the printer go, brrr, right? That printer just be flushing, brrr, right? Jerome, he couldn't let that thing go today. Right? He could not let it go today, though, right? It came back 100 this behind, right? And it's weird, too, because when you see it from the place of the chart, you know what's happening, right? So go again. Let me go over to my little scenario here. All right, let me run over to my little scenario real quick here. All right.
Down the drain.
Yeah, I mean, just throwing good money away, man. Just good money, man. Like, God, all these jokers just be throwing good money away. All right. So, again, look at this calendar right here. Look at this. Look, I mean, ridiculous. I mean, y'all see, you couldn't make this stuff up, man. This S&P 500 chart, this S&P 500, good money. Good money, guys. It flushed, and then it just went way back up into like 281 to try to shake they all did try to shake the bears out. All it did was try to shake out some bears on the back end to try to get you up out there with your little position. I mean, they're gonna try. You can't fault them, right? You're dealing with some crooks, right? Some major crooks here. Can't fault them, right?
Are you sharing your screen?
Yeah, my overall screen. Y'all can't see my overall screen?
Oh no.
It's on my TradeNet scenario.
Oh, okay.
It's not showing? Y'all can't see it?
No, it's not showing now.
Hold up. hold up. What's going on here?
I
Okay,
think
hold
it
up,
tried
hold
to
up.
switch and then stopped halfway.
Okay. Oh, application. That's why. Because I hit application. My bad. Wrong one. Excuse me. Scan. Looking at this again. That candle we were talking about here. I mean, look at that candle right there on the SP 500. The top channel here is this little SP 500 here.
There we go.
And again, just ridiculous. I mean, ridiculous. A lot of cash that just thrown in. They just threw that money away. Like here, you can have it. Like this is what the JP Morgan and BlackRock do. They throw that stock market like a stripper, right? They're like, you better get it, girl. You better get it, girl. And that's basically what they did. They threw a ton of cash. And again, they gonna keep trying. You see what they're doing here? I mean, you see
Make it
exactly what
rain.
they're doing here, right? I mean, they trying not to get kicked out the club. They're trying to keep the party going. It's just like, bro, it's like, man, last call for alcohol been called about an hour ago, and you still in here trying to act like you don't want to go home, right? And that's basically what you got here. So, but beyond that, beyond that, this is just no more than an attempt to keep it from closing below what 280. Like I was telling y'all earlier, they have a goal. They trying to do everything in their power to keep this market from closing below 280. I talked about that yesterday. I said 280 is a major line in the sand. If we close below 280, oh boy.
Lights out.
Right, look out for that 274, right, 279, then 274 region. And so this is no more than just that. And to grind out any last puts that's in the market that bought late in the day, they're trying to make a little extra cash. They're finna try to grind those out a little bit to try to kill a theta on it. Right, they're gonna try to grind them out. I don't know if it's gonna help, but again, they're not going down without a fight. I mean, it's obvious at this point. They hate to even be down this much, right? Because the way the market been slightly selling off over the past month, but just going up even harder and higher the next day was a clear indication that they're doing everything they can to manipulate this market. Everything they can. I mean, to the point where it just seems like borderline. Well, I mean, it is what it is. Again, I ain't gonna make excuses for these people, man. I know what they're doing, but I mean, it's just pretty much criminal, right? It's just pretty much criminal in a lot of ways because again, they're not letting markets correct naturally in a way where if you're just gonna do a lot of the saving the market, then do it at a way where people know that money is going to good use and not necessarily into capital allocation that's making Wall Street fat and rich, and then Main Street sitting around here trying to figure out how they even gonna put food on the table, and they sitting there holding up another stimulus check for people that know they need it. So you're trying to rush them back to work as if that's gonna help, and people ain't really to go back into that war zone out there knowing that coronavirus ain't got no vaccine, no drug, no nothing. It's a whole lot of hoopla where they trying to overtalk what you really feel, and people they misconstruing the information. But again, that's just my opinion.
Yeah.
Right? It's just my opinion. All right. But again, that's what we're dealing with. So again, as like I said, I still got my little Royal Caribbean trade on. Right. I'm still waiting for the flush. I need to get it, obviously below 34. That was the goal I had in mind. We barely breached above it early in the day, around about, a little bit after 2 o'clock, around about 33.86. I think it's still gonna be a little weaker. And then to make it even more of a situation, Norwegian Cruise Line has earnings, right? If I'm not mistaken, the Norwegian Cruise Line has earnings tonight, right? And so that's going to be very, very, revealing, right? That's going to be very
Are you
revealing.
thinking into earnings?
What? Royal Caribbean?
Yeah. No. Norwegian.
Norwegian?
Yeah.
I'm thinking about it. I've been looking at it, throughout the day. Well, before I came on live, I'm looking at some key levels. I am going to hold some of my Royal Caribbean because I'm already in, right? Because that's a sector play. I'm gonna take a little bit off the table, obviously, going into the close, right? Because right now I got 340 shares in it. Again, it benefited, hit my goal. My goal was to get down to the 34s. Now I said if we break below it, at this point I was not necessarily giddy to want to just close it out because the way that I saw the market pulling back, as you can see that correlation. Look at Royal Caribbean right here. See the correlation. Look up here in the SP find. What do you see? What do you see right here? See that correlation? I'll tell you about the correlation. See right here.
Yeah.
Look at the correlation. Look right here. Look at the correlation. Right? Look right here. This chop right here. What do you see right here?
Same
what do you see
move.
right here? Right? Right here when the pull back here, what do you see right here? You see how it's trading almost in tandem? Couldn't make this stuff up. Guys, you got to know how to watch this stuff and see exactly what when you see that kind of level of correlation, you don't believe it? Look at Boeing over here. See Boeing to my right here? This is Boeing. What do you see right here? What do you see right here? Right here. What do you see right here? What do you see right here? Right here, the chop zone. What do you see right here? Chop. What do you see right here? Chop. What do you see right here? Pulling back. Couldn't make this stuff up, bro.
Oh man.
Couldn't make this stuff up. You gotta watch all aspects of the market, right? Especially when you have this level of correlation. right? So everybody riding the coattail of the what? S&P 500.
And I
Because
guess you
they
gotta
know
watch your view up and your 200 MA.
all that. You got to keep your mind on, in the individual stock, but when you're watching the greater sentiment of the overall market, which is the SPY, right? Or the inverse of that in terms of the VIX. We talked about the VIX yesterday. Y'all remember how we broke the VIX down? And I
Yeah.
told you we had that launching point where we finna hit a reverse because the VIX came down and hit its 200-day moving average. And it's
Yeah.
time for the market to do what? Whoopsie, right? Time to turn around, right?
Yeah, the
Right?
VIX is at 36.57 right now. Keeps
Exactly.
going higher.
It bounced off that what? That $30 level, almost close to that $30 level, like game busters, $32 somewhere around there, and went
Yeah.
charging right back up. And so guess what the SPY did? It came right on down. Right? Couldn't make this stuff up. Right. So
And
again,
I think Rory Caribbean, they released the fake PR to try to push their stock up, but I guess it didn't work.
yeah, that was a couple days ago. That whole idea that they started taking early bookings into August. Again, man, look, y'all know as well as I know, man. Ain't nobody finna rush to get on a little dirty little boats. Some people gonna try it because they like, hey, the cheapest, whatever. Hey, good luck. Good luck. But ultimately, the economic, headwinds is already starting to dagger them. Right? It's daggering them, and that's just what it is. Again, natural disasters happen. Right? Or in this case, I don't know what you call it, natural or not. When things happen, you still supposed to be prepared.
Yeah.
They was not prepared. Airline industry not prepared. American Airlines got daggered today. What's the other one? UAL, right? They got daggered today, right? United Continental, they got
Spirit
daggered
Airlines.
today. Spirit got daggered today, right? All the airline industry would just you go look at Delta, all them, Boeing, obviously antenna, it just been a supplier of that sector, daggered, right? I was telling y'all yesterday that Boeing needs to break what? If it breaks below, some key levels yesterday when I spoke about Boeing, we broke all those levels today. Now I'm just looking at 120, right? You see what it did right here, what it did when it got to 120 right here. What did it do? Boy, them joker came in like game busters. And again, because they were watching Boeing too. So they said, man, we got to get Boeing off the local. If Boeing crap below 120, we know what's going to happen with the SPY. We know what's going to happen with the Dow. We know what's going to happen to a lot of the other stock. So guess what? They use it as this stuff. So and once you get a chance to see it for what it is, like Neo in the Matrix, you can trade it a lot better, right? Because you know what's happening. You see exactly what's happening, and so certain stocks obviously carry weight. Boeing carries weight, even though it's ragged in a lot of other stocks like an Apple or some of those right now, but it still carries some weight. A lot of people got Boeing in their retirement accounts. And the defensive plays and defensive ETF, man, Boeing, look, but it's the laggard. It's been the laggard for quite a while because of the issues that it's having. And rightfully so, because they're garbage, right? The CEO, the company, the management, the board of directors are garbage, all of them. Right? And they should be thrown in prison, right? No ifs, buts about it. Right? But anyway, David Calhoun was skated, boy. He got out so fast, boy, with half a little golden parachute. They blew holes in it on the way out the door, though. They shot him on the way out the door, though. Take these buckshots with you, right? Because he definitely caused them a lot of problems because he was, again, put greed and profit over safety. Again, you talking about losing over 350 people that didn't necessarily have to die. When it turned out that they were doing a lot of shoddy engineering, they were lying, covering up stuff. I mean, again, I like when companies get exposed because I always tell people every company out there is a pump and dump. I don't care how much you like it and you rave about it. Even if you work for them, again, y'all know my position. I can care less. Keep you in your bag, but just know that I think about your overall company. On the stock market side of the house, they pump and dumps. All of them pump and dumps. Apple, pump and dump. Amazon, pump and dump. Nvidia, pump and dump. Boeing, pump and dump. All of them pump and dump. We rent, we lease, we don't own. Simple as that. You're not going to get me emotionally attached to none of these garbage companies because at the end of the day, when it comes time to crunch time and see what they really doing, if they really doing good by people in the business and handle their fiduciary responsibility, when you have moments like the coronavirus, it will show. Well, a lot of companies got exposed, didn't they not? Did they not?
Yeah.
They were playing around on the clock when they should have been handling business. So because of that, they hurt workers, they hurt people ways of life, they hurt a lot of people because they were being reckless and greedy. So all of them pump and dump.
GE and Ford broke their supports today.
Yeah, they were going to be skin. Stocks that are inherently weak, obviously end up being weaker, right?
Yeah.
Stocks that are obviously strong, obviously has to find a way to maintain a little bit. Not that they won't break down, but again, a lot of people crowded in those trades because that's where they ran and crowded into a lot of trades like an Apple, right? They crowded into Apple, they crowded into again, Netflix, Zoom. I mean, y'all saw them, the usual suspect. They crowded them, right? They
man.
crowded into them, right? And then Apple almost back dang near to the all-time highs. As if nothing happened. As if them regular iPhones ain't even 5G rated yet. As if Apple as if they selling phones out the man. Y'all couldn't make this stuff up, man. These people are they wickedly criminal. They crowd these dusty stocks that they know people ain't gonna push back against because they can say, well, it's Apple. And it's an excuse. So they went and bought up the XLK. That's all they did. Just bought up the XLK and they bought Apple individually.
But what do you think
Because
of
they know.
Netflix?
Well, I mean, like I said, we spoke about Netflix. Well, you know exactly what's happening with Netflix, right? They're utilizing again. It's the
That
COVID.
440 level.
Right. But you see, again, it had 2-3 days to get above what the all-time high. It still can't even get back up to 450. It's showing major weakness every single time up there near that what that
440 level.
right. It can't fight. It ain't fighting worth nothing. Right. I mean, look at, and then again, it's just chopping back around 435 to 440. That's all it's doing, pinging back and forth. Right. That's all it's doing. It's just pinging back and forth. Right. Again, got up around about 445, but before that, again, it was trending. Rough around about what 443, 441, 440, 439. Then it broke. Yesterday it finally broke like it should have when the market turned over, went from 441 all the way down to 431. Right. And then guess what it did to this morning? Look at this garbage here. Look at this garbage. You mean tell me all of a sudden they got that bullish on Netflix from 431 all the way back over 447? Couldn't make this stuff up, man. These people were just brutal with it, bro. They brutal with it. And did all that just to do what? To come all the way back down here and go lower. Right? And they still trying to save it on the back end of the day. Right? Greedy, bro. Again, it's a crowded trade. It's sitting up here near all-time highs, dang near. Well, again, close enough. But we know some major resistance around that 450 when we talked about that in our training session. Right? That 450 is a nasty little resistance point for Boeing. Excuse me, Netflix. And they trying. Again, they trying. They are trying. Right? They are definitely going to try. But again, hey, we know what we're dealing with, guys. So just a quick. So anybody in the back chat got any stocks y'all want to look at? I know I've just been going off a lot of stocks I've been talking about, but again, let me even it out, balance it out. You guys got any stocks y'all want to look at real quick before we get ready, kind of, move into the back end here before we close out? Anybody got any stocks they want to look at? Want me to go over that you might want to come on and speak about?
You can finish up this.
Take a look at Amazon. Over.
Amazon. Let's run over to Amazon real quick. Let's go roll that beautiful bean footage. Right. Roll that beautiful bean footage over there at Amazon. Right. Amazon getting it in. Or when I say getting it in, they getting it out at this point. Because again, that was an overcrowded trade. By all intents and purposes, very overcrowded. Right. And it was obvious that it was overcrowded too, because again, just looking about, again, we talking about, where it came from after earnings, gaps up, again, goes up and hits all-time high, right, near 2,500, pulls back again, following, a couple days after, which is just crazy. The next day after, it gaps down, and then it just charges and races back up. And again, it was just overbought. And y'all know I showed it Amazon in the earnings too. I talked about that. It was on like 2 shares. I think it was like two or three, like 3 shares or 3 shares or 3 shares. I take it back with 3 shares. It was like 3 or 4 shares, right? Because I didn't want to risk it. I just didn't want to risk it. But I banked on them 3 shares, right? Because again, it came from what? At that point, all the way down from obviously 2,500, all the way back down. But again, I got short, up around that point. I think like 24, somewhere around there, right? And again, it gapped up and then it pulled back. Obviously came down like 226, 230, 2,300, somewhere around there. Now, if you look at the chart, from a broader market perspective in terms of where it's looking like, off some of those lows back on, April, around the beginning of April, it's now starting to kind of roll back over. Again, very crowded trade, very overbought. And I'm saying overbought in essence to, again, where it's, it came from in terms of its March lows, right? Around about $1,600 and went all the way up to like near $2,500. Again, it has a use case. We get it. Amazon now moving into the defense contract side of the business now. I don't know if you guys been following that, right? with the AWS cloud serving businesses that they actually provide server infrastructure for, Department of Defense. So they able to negotiate for contracts. Them and Microsoft are fighting now. This ain't nothing new. That news has been out for quite a while. So you got to follow them for that. Now they're starting to get government money, government grant money, right? But on top of all that, again, you're talking about, again, a distribution channel, logistical channel in terms of Amazon, which is the best in the business, basically the best of breed in the entire world, in terms of its use case, in terms of being able to deliver products for people who are necessarily affected by COVID-19, but they also have other aspects of the business that they've actually, that they're selling to. So it's a well-oiled machine. It's only going to get, bigger and crazier, right? So again, you got Jeff Bezos about to go into the $1 trillion club soon. He's going to be worth $1 trillion before it's over with, right? It's obvious. When you add up all his assets that he has, he dang near it. Probably, even some of on the forward-looking valuation perspective, he definitely up there near it, right? So you probably gonna have your first trillionaire in a person like Jeff Bezos if they continue to let him go the route he's going. He's monopolizing. Again, call it fair business or not, whatever the case. He's definitely showing you that he's gonna be a bit, a major player as the world has ever seen. Because again, his investment value is actually better than Warren Buffett's. And people might go, what do you mean by the average point? Hold up, brother. What you talking about? You talking crazy now. Think about where he came from to where he's at today. And I'm saying that for one reason and one reason only. Go back. Let's do a little timeline. Let's do a blast from the past. Amazon Inception came in what, 1997 as a publicly traded company. It was already out before then. Publicly traded company. $1.35 back on what? 1997 to June of 1997. Again, what if your parents threw $100 on Amazon back in 1997? I'll wait, right? And today it is up in there, $2,400-$2,500 a share. Couldn't make this stuff up. Now, if you look at this from a place of inception, in terms of when he came on the scene and how well he grew his business in that period of time, I mean, this is what you call up and to the right, bro. I don't know what y'all know about y'all, but when we're talking about up and to the right, a stock trader's dream on the bullet side, this up and to the right. I think almost like a straight line, like they just put a ruler from here and took it all the way up to here on a straight line edge, and it's just been banging up ever since. Now, this is a line I drew way back, a while back, right? Look at this line from 2008 alone, all the way into December 2018. How I just respected that, off that pivot and just kept above it, barely pulled below it slightly once in the entire, from 2008 all the way to 2018, 10-year time span. It barely breached below this trending channel, trending bar, this T line, they call it T line, maybe 2 years, 2014 and 2015. And then it got back above it and been lights out ever since. Couldn't make this stuff up. Of course, you want Amazon in a long-term portfolio hold. Of course, you want to hold this and pass this on to your children. I asked a very simple question. Do y'all think Amazon going anywhere anytime soon? The only way Amazon gets dismantled is if the government dismantles them. They've been trying with all this antitrust law stuff. But the one thing that Amazon got for it, or going for it in its favor now, is starting to get some of that government money. They're starting to get the grants now for defense contracts with these servers. So now they're becoming, like Boeing is, it's a point of what? National security. That means they're going to get what? Protected. Couldn't make this stuff up. Smart move by Jeff Bezos. And Trump was fighting him. If y'all remember Trump was fighting him in 2017 and 2018. He kept fighting Jeff Bezos because he's jealous of Jeff Bezos. It's obvious.
And then they leaked the story about him and a news reporter, and Trump capitalized off that because he know the big dog at the company. You know what I'm saying? So they was trying to blackmail Jeff Bezos.
Jeff Bezos, right? When he had that message, well, he called it the message divorce with his wife, right?
Yeah.
Aaron, whatever her name is, and he got with this little TV, I think she was South American, a little news reporter, and they used, matter of fact, just go back to that story, they actually used her brother. Her brother was the blackmailer. They got with her brother, paid him off to break the story. Couldn't make
Right.
this stuff up. Her own brother tried to dagger her relationship,
Yeah.
all for profit
Right.
and greed. Show you how
Crazy.
nasty and dirty they are, right? It didn't work.
Mhm.
It tried. It slightly affected them for a little while, but keep like, man, this Amazon, bro. We don't care about his personal life. And that's basically what the market said. Okay, yeah, we don't care about the personal life. I'm interested in this stock growth. Because know what they did?
Right.
They went back to this chart right here that I'm looking at right now. And they said, what? Bruh, where that bag at? I don't care about his bedroom action, right? Where that
Right.
bag at? See
Fact.
what I'm saying?
Mm-hmm.
And then here it is right here,
That's right.
right? Go back to August 2018. See, I'm going to show you how crazy the market is. Go back and look at any kind of news on Amazon around about March 18, somewhere around that point. August of 2018, August 2018, October, somewhere within that trunk to the top time frame. That's when some of that news was obviously kind of all over the place too, or I mean other stuff. I forgot what was happening during that time. Matter of fact, hold up, let me see. Because again, I'm always trying to make a correlation as I'm supposed to, right?
Mm-hmm.
Right. Excuse me. So you go back. Let me see. This was no. This might have been. I think this was it earnings or suffer this loss. Investors continue to on disappointment, and there was earnings, and there was a lot of stuff going on at that time too. So I would have to go pull back the news publications during that time frame. But I'm pretty sure a lot of it has to do with what was going on with all the kind of stuff too. Let me see.
Baby.
So let's say around that time frame, players medium exposed. Let's see. Yes, so basically it was roughly around the end of that time frame, going back to around October, November-ish, right? Into January of 2019, January, February time frame when all that stuff was trying to come out, right? It's probably leaking somewhere around. I forgot the actual date. But again, it wasn't enough to turn the market. And that's what I was trying to show the correlation to that, whether or not it was even enough. It wasn't like people going into Chipotle, and saying there's a rat or a roach on the floor in the stock tank. Because remember Chipotle tanked the first time, all people made that complaint to the health department, and the stock got cut in half, right? And ever since then, they kept trying to do it, right? But at some point, it necessarily just, they couldn't stop it at that point, right? They couldn't stop it at that point. So I think at that point, it was just obvious, that Chipotle is going to be, it's just here to stay. So basically, I remember when it went from like about $700-800 a share back in 2015, near going into 2016, all the way down to like $200 and change, right? Couldn't make this stuff up. Then after that, it's been lights out ever since. It's been lights out ever since. Chipotle got their business right. They having an issue with the salmonella, E. coli. I mean, people just kept finding ways to dagger. All you have to do is make a complaint about Chipotle and the stock just get beat up by it. Now, it really don't even affect it that much, right? When the people try to put out the little hit articles on Chipotle because, new money said, hey, go back and look at this. They're looking at this, right? They're looking at this. And it's just not finally getting ready to bang up against us what? The top of this linear regression band on a real major breakout. You're talking about Chipotle is literally about $70 away from breaking out of this linear regression band. Look, see right here, it came somewhat close to it right here, back in 2015, right? It came down below, and now it's back banging up against it right here. Couldn't make this stuff up. It pierced above it on the wick, right? Around about this 950, 947, 950, all right? If it breaks out above this box right here, guys, I ain't want to tell you when to do what you shouldn't do, what you should not do, and this, that, the third. But if it breaks out above that box right there, that means the stock gonna be what? Bearish or bullish? Right? It's like, man, were you trying to be funny after before? Is it going to be bearish or bullish if Chipotle breaks out above this linear regression band right here? If it ever gets above that, is that going to be a bearish or bullish play? Right? It's going to be time to what? Look at him.
Oh, are you talking about what's on the screen right now?
Oh, yeah,
Chipotle?
Yeah, if it breaks out above that linear regression band, at the top of that band up there, this right here says it came close way back in 2015, right? Couldn't do it. Now you up here now, and the market get beat up because of coronavirus, but people still buying Chipotle apparently. Because guess what? Chipotle got that magic cure for that Rona apparently, right?
Yeah.
That joke get ready to bang out. If it gets above this purple little line right here,
so
is it going to sell off or is it going to take off?
If it get above that line, it's gonna take off.
It's gonna go up there and join what? The $1,000 club.
Mm-hmm.
Mark my word. Mark my words, guys. Y'all can book that. If it gets above 950 and it got earnings coming up, right? On what day? Right? July the 1st. And depends, we finna get ready to go back to work apparently. Well, you know they are, right? America finna go back and go to work.
Mm-hmm.
And so people still that's been buying Chipotle up until then, cause we definitely buy it. You know, my little guy that he likes Chipotle. It's about the only thing we can get him on the vegan side that's pretty decent. Right. And they got their ingredients better. Their ingredients got a little better. Again, they got their money right. You can't fight against a company like that. They got their money right. That's why they got a decent little balance sheet. And what Chipotle, what coronavirus, right? Joker still getting that DoorDash and Uber Eats right onto the house from Chipotle. Getting that fresh fast food or fresh food fast, whatever they say they're using their little motto.
Yeah.
And it benefiting because again, institutional trade like hedge funds, you go look at some of the 13 filings. Man, a lot of institutional holders got money in the Chipotle. Why wouldn't they? Right? Why wouldn't they? And so again, gets above 950. All I'm gonna say is welcome to the $1,000 club because it's going up there. It's definitely going up there. It's gonna be going to join Google, Amazon, Bookings Holding, and those types. It's going to the $1,000 club, and that means if they don't do any kind of forward splits at that point, because they could do a forward split, who knows? But at this point, they going to the $1,000 club. So again, keep your eye on Chipotle. That's all I'm saying. At this point, they're definitely a bullish play, especially if you got in at the lows of 2018. I mean, $274 a share, guys, in 2018 into 2017. I remember like yesterday looking at this stock back then too. Is again all that kind of stuff with the E. coli, salmonella. Stock just got crushed during that time span. Just kept getting bad news. It go low. Somebody find a rat in one of the stores down in Virginia. It go lower. I mean, they just kept dealing with the dragon Chipotle. Chipotle said never again. They went ahead and they fired the old CEO and brought in buddy from Taco Bell, the CEO, the new CEO from Taco Bell, and brother been getting it ever since. They got drive-through now at some of the Taco Bell at Chipotle. He was the one that orchestrated the drive-through for Chipotle. How beneficial was that for some of these Chipotles to have a drive-through? And you had to sit there and wait in that. Man, these people look at it. They leveraged that dude. They brought him in for the right stuff. He brought in all that, got them on a logistical side where they can, do a lot of this, the ordering and all how they set that up when they ordering scenarios. And all I'm saying again, you just gotta follow the tech, follow the money, follow those kind of companies that got that kind of level of innovative, revolutionary kind of technology, kind of keep revamping and remodeling their business model and their business plans to accommodate the wave of what the future may be looking like in terms of how people value and view these so-called restaurants, and like that nature. And they just keep evolving. And so that's why the shares keep benefiting off of it. Again, from $274 all the way up to the $900, God, man, you could make this stuff up. Could not make this stuff up. Right. So again, so that's the kind of stuff you want to keep in mind, guys. Just always be, you find those, I'm always talking about find those best in breeds, right? Find the best in breeds, best in their, in the field or in the markets and this, that, the third, and then figure out where it's at relative to, its performance over a yearly perspective, 2-year perspective, looking at some particular areas where you may want to think about, if you think about getting a long-term position in it because it's going to be one of them stocks that may be around for a while. So I ask y'all right now, right, over Chris and Brother Name X, since y'all on the panel and everybody in the back chat too. I'm gonna ask y'all. I always ask these questions, y'all. Y'all asking me that. But I asked you that because that's how you got to start thinking. Like, again, it's a marathon, not a sprint. Long-term investor, right? Do y'all think Chipotle gonna be around in the next 10 years?
Absolutely.
Right, Brother Namex, what do you say? All right, I don't know if you can hear me. Probably can't hear me. Brother Namex, you still there? Right, you might be listening in. All right. So how many of y'all think they're gonna be around in the next 10 years? Right. So we got some people in the back chat. Brother Cristiano said just joint. Right. Brother Teague says yes. Right. He says yes. Right. So if you think they're gonna be around in the next 10 years, now here's the next question. Name me another company out there who's their competitor. Who's the next company who's competing with Chipotle in terms of their business model, their value, and what they do for that particular, value of food that they sell. How many? I mean, name some of those companies that are pretty much a competition to Chipotle. Anybody? Who's Chipotle's competition? Let me just word it that way, without making it complicated.
Anybody that's, publicly traded is Taco Bell under Yum, but
we're talking about that. That's it. That's strictly in the field of what they are, because again, you can say some of the other restaurants somewhat close, but and we're talking about directly in their field of work, that they do in terms of what they sell and offer. Their genre, I should say, their genre of restaurant. Is there any competitor they have out there? Anybody?
Well, it's Mexican food, right? So, Taco Bell is nah, it ain't nobody nobody competing with them. I'll just say that.
So
keep it up.
Right. You know what I'm saying? To keep it a buck. So it's safe to say that their competition is what? Non-existent.
Right.
They can only hurt themselves. Now, somebody mentioned Panera Bread. Now, here's what's interesting about Panera Bread. Panera Bread is not a publicly traded company, unfortunately. Unfortunately, because again, they have that kind of same business model, how they do stuff with the online ordering. They very well scaled in that perspective, right? Again, very loyal fan, fan base in terms of people who love to go to Panera, right? I mean, really, really good, kind of like how you look at Chick-fil-A, right? If Chick-fil-A was a publicly traded company, man, y'all know that stock could be trading at around about $600-$700 a share. It's people that are loyal to Chick-fil-A like none other, right? And so that's important when you think about long-term type investments. And I'm saying that because if you got children or something of that nature, you can start setting them up right now. Well, if you see this is a good time to buy now, not, but you get my point. At a point where you kind of figure out, where is a good time to probably get in on Chipotle on any major pullback. Well, guess what? It had one back on when the coronavirus actually hit, because that was the time to get in, because everything so like everybody got hit. It didn't matter who you were. It came all the way down to $416 a share. Couldn't make this stuff up. Not only did it go back and retrace all the move, it went higher. Couldn't make this stuff up. That was your time to get in for your long-term position in Chipotle. I'm sorry to say, I don't know if we're going to see 416 again, unless they do a forward split, or unless something really come out. Something has to come out that's crucial on Chipotle to bring it back down to that point, right? So that was a gift buy. That's why they bought it up so fast. Them people couldn't wait to buy that dip up. So again, 10 years from now, it's 2020, right? It's 20. Now you're talking about way over here. I'm going to show how crazy this linear regression band is. Look what the linear regression band is 10 years from now, if it just kind of stayed the natural course where it's trading at now and just trade it, to the upside, right? Naturally, the top of the medium line band, of the bottom band, once it converges here and crosses over here, and you have a crossover convergence here, is roughly in 2030, it should be trading at a minimum, right? Let me blow this up, a minimum, right, of $1,600 a share, and then $1,700 a share in 10 years from now. That's not me making that up. That's showing you exactly what this linear regression band does in terms of what it does from a forward-looking outlooking indication. It's going to be trading at around about $1,700 a share in 10 years from now. Now, let me ask y'all this question here. How many of y'all think that's plausible? How many guys think it's plausible that Chipotle will be trading at around about $1,700 a share about 10 years from now, knowing that it's already at $900 right now? Anybody? Is it plausible? Press 1 if you think it's plausible in the back chat. If you think it's plausible, press 1 in the back chat if you think Chipotle has a chance to be trading at around $1,700 in about 10 years from now.
Most definitely.
Definitely, the fundamentals is good.
Right? And so for another company to come in to kind of be a competitor to them, they would have to go through everything Chipotle have already gone through to try to what? Get to that level, to steal that kind of market share away from them. Right?
That'd be too far behind, actually.
That's the point I'm getting at. And Wall Street showing you that, bruh, Del Toro, y'all already know where I'm going there. I want to ask y'all who their competitor is. Y'all finna tell me Del Taco and Del Toro, right, or El Polo Loco. Let me go. Where my West Coast people at? Where you at, Raul? Shots fired. Where my West Coast folks at? You finna tell me El Polo Loco, right? Y'all remember Chris Tucker, right? El Polo Loco, El Polo Loco, right? Yeah. Hey, El Polo Loco. You finna tell me El Polo Loco finna compete with some doggone Chipotle. You finna tell me Taco Bell, with their CEO that was with them, jumped ship and went to Chipotle, finna to compete with Chipotle. You finna tell me Del Taco, of all people, Del Taco, even though they ran the Beyond Meat to get Beyond Meat, it wasn't enough to say, help Del Taco. Right? Chick-fil-A is not even publicly traded. Panera Bread, not publicly traded.
Right.
Y'all see where I'm going with this? The foot traffic that Chipotle got, so none. And look at this pattern right here. What do y'all see right in this pattern right here? What is that? What is this? Look at this, guys. Couldn't make this stuff up. What is this pattern right here? Y'all see this pattern right here? Let me go and just draw it. Let me go and get it over with. Right? Say true story. Right? let me go and just draw this up here right now.
That cup and handle. Cup and handle.
Matter of fact, let me do it the right way, right? Let me stop. Right? Even though I mean y'all understand what I'm getting at here, but right? Let's go on and draw that there, right? Let's draw this thing tight. Let's draw it tight. What do y'all see right here? Right? Some of y'all already said it, so you already know what it is. Right? See, I'm straddling that right there, and then right, even though it can do it right here, obviously, fleet up from here, but I couldn't make this stuff up, guys. Not making it up. Right? Not making it up, right? So again, get in on the action when you can. So if you're fortunate to get it back down near what, 626. Keep in mind, we are still going to hit some real major economic headwinds in the market. Don't get it twisted. We still got, again, depression. We're moving into the depression. We're already in the recession, and we're going to have all this economic headwind data going to start unraveling in the markets, obviously, because the market's still sitting there banging up in the points where it shouldn't be trading at anyway. So a lot of stuff to still deal with. But for all intents and purposes, even if you can get this thing, if you get lucky, even to get it back down towards 660 or 600 or something, 700, which would be fortunate, right? Which you will be fortunate to start your new position. Again, I would definitely put a buy alert down there. I don't know if it ever trigger, right? I doubt it ever trigger. But again, just for the sake of matter of fact, let me do an alert right here. I add at 775, right? Let's go on and do it. I add one at 700. Actually, I do it it's at $700, $705, right? I add one there just on GP, right? Good luck though. I tell myself that. Good luck with that. But again, long-term hold position here. This thing is definitely going to the $1,000 club. Y'all know if they open this country back up, you think people buying Chipotle through DoorDash and Uber Eats and all that stuff right now, them lines are going to be long at places like Chipotle, them college kids. Come on, man. Come on, y'all. It's in a massive cup and handle right now. Look right, even when it pull back here at this point here, which is an ugly little cup and handle, more of a V shape. But if you just draw it from there, it hit there, and then what? It broke out, right? I mean, it almost went to the same length as the bottom of the cup on the expansion to the upside. So you talk about from $43 to 153, from 153 up to like what, 427. So if you say from 269, dang, all the way up to like 800, 800 where it's at near 900 now, somewhere around there. And if you talk about, breaking out over a gradual, period of time here, basically it took what? It took from 2017 to where we're at now, 2020, right? April 2020 from November to 2017. So basically roughly around about 2 years and a little change. So 2 years from now, if you do the same extension off that pivot point from here, 247 to the 900, you talk about the same value in the next couple of years, potentially, up higher, about that same amount, $600-700. Right, so roughly around about $1,500, $1,400, somewhere around there, right? In the next couple of years, could you see Chipotle trading roughly around about $1,300 to $1,400 in the next 2 years, 2.5, 3 years? Anybody? Right. So again, you got to map this stuff out in that perspective. You map it out, you can see, whether or not you see there's some value in some of these stocks for us in terms of growth plays. Right, strictly growth plays at this point in terms of long-term opportunities. So this will be, even though it's up there. I mean, it's up there. It's up there, right? But you still have to ask yourself: could you see yourself again buying it? Up there at that point, because of the fact that it's a growth stock. So guess what? If you don't want to feel like buying all them shares outright right now, well, guess what? Robinhood has fractional share buying power now. Stash has fractional buying right now. You can put 100 on it, 200 on it, 500, whatever. You can put that on it and just kind of build into it. Excuse me. You could do. Here's what's interesting. You could send $5 into Chipotle every day for 365 days. Right. That's $1,800 some odd dollars at the end of the year. Just accumulating. Because on a long-term hold perspective, it has potential to kind of obviously go higher. Again, strictly my opinion. Not telling them how to do that, but I'm just saying, based upon us just kind of, throwing a couple of ideas together, looking at everything, this, that, the third, it can easily, very well much so, do just that. Right? It can easily do just that. Couldn't make this stuff up. Right? And so that's the part of the game where I say you got to look at so many different aspects of the market. You always want to look for best in breed, and you want to look at their competitors. If they don't have any natural competitors, well, guess what? It's a free for all in a way that depends on however the market want to take it higher. They're gonna take it higher. I mean, seriously, Del Taco, right? What Del at? What Del Taco at? All right, let me. Where Del Taco at? I forgot. It's spelled together. I think, if I'm not mistaken. What's Del Taco? And the Del Taco, if I'm not mistaken. I might be saying it wrong, but I ain't crazy now. Yeah, there it is. I'm like Taco. I know it. I forgot to. But anyway, look at this garbage. I ain't trying to call it garbage like that, but I'm just saying. Del Taco. Now again, it dropped and almost retraced its entire move, right? Because guess what? They were benefiting off some of that drive-through money, or excuse me, DoorDash delivery money, right? But again, it's a dying breed if they can't still, again, stay in the fight. But you might start this trading like $6 a share. $6 a share. What's the other one? El Polo Loco. Right, Loco to ticker symbol. Right, look at this. Same way. Now it benefited again. Y'all know these stocks benefited because what? DoorDash, Uber Eats, right? So of course they got some business, right? But again, this stock here trading at what? $12 a share, right? It was less low as like $6.50-something. It beat 100% retracement off the lows, right? So some of these might be plays that you can look at too, as far as delivery business. The way that the coronavirus situation is. However, but they're not and competitive value to that of Chipotle. They're just within the that sector or that genre of business, right? So again, it's just so many ways you can look at the market. But I want to be able to premise it in a way where if you're looking at the market, sorry about that, over Chris. I got going and couldn't see you in there. But yeah, so that's how you look for long-term investments. So guess what? You $5 a day into Chipotle, right? You $5 a day. Obviously, you wait for a major pullback to happen if you get one, right? And then start your new position. But $5 a day, 100% right, brother T. I got 5 on it, right? 5 on it, right? Because Chipotle ain't going nowhere, right? So guess what? You can pass that stock on to your children one day. You can pass that on to your daughter, your sons. That's something that you can pass. 10 years from now, you can pass Chipotle on to. Here's Chipotle. Here's a little bit of Tesla, right? Here's a little bit of Amazon, right? Best in breed, here's a little bit of these kind of stocks, right? So again, just something to think about. Again, I'm not sitting there telling you to go John Wayne. I ain't saying, you got to play the role of John Wayne, something like that. But again, it's just showing you that hey, there's just more ways that you can be involved in the market. Do some of the long-term plays who are best in breed. If you think you kind of already missed the move, you still got to understand that if people still buying at some of those points, you wait for the next potential great pullback. But these are long-term buying holds. Again, just my opinion. Just strictly my opinion. Strictly my opinion. All right. So that's it, guys. So again, you got a market retracement here, going into the close like we figured it was gonna happen. So ain't nothing new here. Again, criminals gonna do what criminals do. So the 1 hour chart, look at the chart. Look at the SP 500 right now. I told you when they was gonna start buying. I told you exactly when they was gonna buy that, right? What? Around about 330, 320, somewhere around there. Right, going into 350. I told you they're gonna buy the market. I stand to be corrected every time. I stand to be affirmed too. So there you go. There it is. Like, but John Witherspoon, there it is, right? There it is.
There it is.
There it is, right?
There it is.
Right, AIP to the ancestor, right? Right, there it is. Right, so they made it very obvious, what they were doing in terms of, again, trying to save the SP 500 at that point.
Right. Almost time for stash party, y'all. 4 minutes.
Yeah, we got 4 minutes before the stash party kicks off. And so again, guys, I hope you guys got something from today's live stream. Again, I try to provide some kind of level of insight. Again, this is just my opinion. I love when you guys come on to the panel again, because again, it ignites the idea we can share ideas. So I implore you guys that's in the back chat, when you do get a chance, come on to the back channel, man. All right, I love to hear your ideas. I love to hear from you, see in terms of how you're looking at the market. I love to be able to kind of help wherever I can. I'm here to learn too. Don't keep it. I always tell people I'm here to learn just like y'all are. Don't get it twisted. We peers at this. I'm always going to tell y'all that, so you don't get it twisted. We are peers, right? We need all eyes and ears on deck every single day looking at this market. It's us against institutional money, right? And we need that kind of camaraderie, that kind of value of understanding, how we should be, forming our Voltron, so to speak, right? To look at this market, because you need all eyes and ears on deck, right? So we're trying to get some of that money back that's owed to us, that they're benefiting off of in terms of these banks and all this, that, and the third, right? They're making a mockery off of taxpayer dollars, and guess what? We need to, we need to be able to go back with our pitchforks and our buy buttons and send buttons and indicators to get some of that money back. Right? We riding with the buy and sell button, right? And riding with indicators and buy signals and scanner. We using that kind of things to get some of that money back, right? So you see what I'm saying? So that's how we want to kind of position ourselves. So again, this look at this calendar, guys. Couldn't make this stuff up. Look at the greed in that. You mean to tell me you go all the way from 279, 278, literally 279, 278, all the way back to 281, 282. Seriously?
Yep.
Seriously. They say seriously.
That fugazi.
I'm talking about straight fugazi. When you say fugazi, I mean a dusty fugazi. That's that fugaziness there, boy. I'm talking about that's that that stuff ain't even plated. That ain't even that plated gold. That's that. I don't know what kind of gold that is.
That's
I
right.
don't know what kind of gold that is. But again, that's what we're up against, guys. So again, we're trading. We're trading to show ourselves approved based upon whatever the opportunity that are presenting itself for us, right? And so within knowing that, it's just in our best interest to always try to again position ourselves to be on point, right? It's in our best interest to always be on point. All right. So kudos to everybody who again enjoyed today's bill. I think we had a great powwow today. We got some good information in. brother Namex, did you
Yeah.
enjoy
Oh,
the
I
bill today?
enjoyed it. I loved it.
Awesome. And there
Yeah.
goes the bell, right? There goes the bell, right? And with the markets fleeting back up to the upside, again, it just goes to show you that, when they want to turn this market, they're gonna try to find a way. They're gonna try to find a way now. Best believe they're gonna unload the cannons, the dragons, all that, all right? All that and then some. So some of the earning plays we got today are who got earnings tonight again? I looked at a few of them. Let me see real quick. Let's do this real quick. I'll leave it up a little bit here. Thank you guys. Thank you, brother Brandon. Thank you, brother T. Over T. Thank you, Camille. Again, y'all already know all you got, brother Mathis, family Cristiano, brother Raul, our brother GPJ in the house, brother Mr. Maroon Man in the house. Family Mr. Elite, everybody. Everybody, right? Everybody again that contributes here. Again, I can't say it enough. I'm always appreciative of it, right? Because again, we're trying to build a village up where we can have a place where we can come and feel comfortable, kick our feet up and get some knowledge, share some knowledge, learn from it, right? And also then go out there and apply it, right? So having that kind of that kind of energy, to me, it's just phenomenal, right? It's phenomenal. So you got Smile Direct. They got earnings tonight. That's
Cisco.
one to watch because say again. Yeah,
Cisco.
Cisco. Yeah, definitely Cisco. We got who was the other Jack in the Box. That's one to watch. Restaurant. Right. We all saw what happened with Shake Shack. Shake Shack was all over the place. Flowers Food. That's food company. Cisco definitely watch Cisco. Right. So our key day, remember that? That's like a little battle sign play that has to deal with GMO wheat or GMO corn and seeds, basically. So again, you got some plays out there worth watching. Definitely got some stuff out there worth watching. I think wasn't Norwegian Cruise Line supposed to have earnings tonight too? I think they pulled it. They might have pulled it. They might have got scared like Royal Caribbean did and pulled it. Because I don't see it up on what's the name. Earning Whisper, but they were slated to give their earnings tonight, if I'm not mistaken. So they might have did what Royal Caribbean did last week. Because Royal Caribbean was to give their earnings back last week, and they didn't. They pulled it, right? They didn't want everybody to see them numbers, right? They're trying to hide them numbers.
Oh, on Finviz, it says May 14th before market open for
Oh, it's tomorrow
Norwegian.
morning. Okay.
Yeah.
Yeah, but they had them split, and it's weird because they were showing it for this afternoon, so they might have switched it, for today. Oh, excuse me, for tomorrow morning instead. So again, we'll see what comes from that again. So again, just part of of them trying to stay above water. Right? They're trying to stay above water best they can. So again, very very interesting kind of events, being able to kind of watch these stocks prepare themselves for the guillotine, is like they call it. Now, interesting enough, so even though we know they got earnings, again, you want to keep your eyes on Carnival Cruise Line. You want to keep your eyes on, again, Royal Caribbean Cruise Line, right? Again, you're going to have the bullish trader going to say that it's already priced in, right? I don't know how can you price in a situation like this, right? But good luck nonetheless. Again, but the calls and the puts were very cheap. right? The calls and the puts going into earnings for Norwegian Cruise Line were like very cheap, right? So if you did have a little mad money on the sideline somewhere, it was a great opportunity to get in on some of that action, right? A great opportunity to get in on some of that. And I'll show that real quick here on the way out the door here. Exactly. Look at the SP 500 close up running near 282.30. Couldn't make that stuff up. Boy, them jokers over there. Boy, don't play the radio, bro. Hunter, they managed with it. They are managed with it. All right. So, I'm sorry. I'm still showing the screen. Sorry. So real quick, let's do this real quick, and I'm getting ready to get off here, guys. All right. So let's go to Norwegian Cruise. Hold up. What is that sticker symbol? It's NCLH. Excuse me. Hold up there. I'm sharing screen. Sorry. Real quick here on the way out the door here. Real quick here on the way out the door. So this was the calls and the puts going into today. Now, this was the ratio. Look at this ratio. Right? We talked about this, Brother Namex, in one of our training sessions. Remember I told you when you see that kind of level of what? Stalemate in the puts and the call ratio?
Yeah.
When it's tight like this here, this is better. I'd rather have this kind of level of puts and call ratio than to have it being what? A lot of puts, a ton more puts than it is calls. Because what we were seeing last week, when you had more calls than puts, what happened with the stock? It went down. When you had more puts than calls, what did the stock do? It went up. Like, you couldn't make this stuff up. It's like the market makers and the institutional holders and the hedge fund was just waiting and want kind of what? Trap some people going to in the overall sentiment where everybody was trying to crowd the trade at. They burnt a lot of option traders that way. Now you got even, pretty much an even Steven kind of what put the call ratio going into earnings on this one. This can get very juicy. Now, I mean, very juicy. Now look at some of these implied volatility on some of these plays. 200, 100, right? 250 on the 13. I mean, look at all this volatility. Look at the contracts. And they were cheap. Look here. The $10 calls were like 35 cents to 40 cents. The $9.50, let me need the puts, give me the puts. The 40 cents for a $10 put. 20 cents for a $9.50 put. 10 cents, 10 to 15 to 14 cents for the $9, the $9 puts. They're cheap. The call, look at that. $10 call, 50 cents. 10.50, 30 cents.
So are you talking about the put volume or the open interest?
This is the cost of the puts and the calls, the actual cost, the bid, the bid and the ask. So 60 cents for the $10, 10.50 is 37 cents to 30 cents, right? The $11 calls were like 22 cents to 20 cents. I mean, cheap. And you look at all this implied volatility. That's over 40,000 contracts in open interest. You got 12,000 and 11,000 on the daily volume, on the volume going into today, I should say. That is a lot of contracts. That's a bottleneck, pressure cooker moment waiting to expand and happen. Couldn't make this stuff up. Right. So again, definitely one worth watching, and you're gonna have a lot of people, on that side, as a matter of fact, let's go to the peanut gallery. I always saying let's go to the peanut gallery. Let's go look at this real quick again. I'm ready to get off here. I know I keep saying it, but I got to go here. But I got to show y'all this. Let's go to the peanut gallery, right? Y'all know Stock Twits is the peanut gallery, right? That's the peanut gallery over there. But again, you can get some good information off of it. Don't get it twisted. Y'all can get some good information. You got to just sift through it. All right. So you're looking at Norwegian Cruise Line again. It closed down, obviously. 80 cents on the day. Right. Pull back, obviously. Let's go to the 6-month chart. I mean, look at that mountain there. Look at that. Ooh, $58 all the way down to 10.20. Right, 10.20. Now you say to yourself, man, it can't go no lower, bro. It can't go no lower, man. It can only go up from here. So you ask yourself a very simple question: what's the use case for Norwegian Cruise Line at this point? What's the use case for Norwegian Cruise Line going into Q2? The only way this goes up is what? If Wall Street says what? They feel like the bottom is in. And it can happen. They could just bomb on earnings tomorrow, and guess what the stock gonna do? Right on it like $11, $12. or just stay sideways, just go nowhere, and then burn up all the calls and puts. Right? The market is brutal. So the peanut gallery saying what? See, there it is. We already got one. It's already baked in. Seriously? Okay. They just dropped some news today. We got downgraded, and they also put out that they getting ready to potentially think about doing a little bankruptcy, but we'll see. But again, people are excited about it too because they feel like the bottom is in. Right? They think the bottom is in. Right? Again, Wall Street don't care whether they got good fundamentals or bad fundamentals. What do Wall Street see? This right here. Right? They see this right here. They see this low of what? $8.83, $8.43, or $7.80 here, and they see all this right here. All those trap traders that are still up here who haven't sold yet, they're trying to say, "Oh, let's go dig into some of that money." Right? Let's go dig into some of these people that's averaging down, right? They say their position, and let's run it higher so we can eat off the bottom, right? Let's feed off the ash. They're feeding off the ash right here. And they could easily run this thing up until some resistance, to that resistance point around about $11.95, $12, and then the next one around about $15. Just on the earnings, if they miss on earnings horribly or whatever the case, they could still run it higher just to kind of feed into that, all that level of potential, all the economic headwinds that's been coming at this company that should be tanking it lower. They can send it higher. So it's going to be interesting to watch tomorrow. I'm just saying this for a reason because we know what's going on here at this point. That it's going to be one that's everybody going to be looking at. And you got a lot of people getting bullish on it. Right? You see a lot of recent red in there too, but you see a lot of green in there too. But ain't nobody riding those ships right now. I'm just saying, where the money coming from? Right? They can only give a sentiment that they're trying to find ways to keep the business afloat. That in itself could be enough to keep it bullish or turn it bullish. So you gotta think it all the way through. I'm saying all that, so you gotta think it all the way through before you take some of these trades just because it seems like it's a sure win to the downside. I beg to differ. You can never look at it that perspective. You cannot look at it from that perspective. You got to think it all the way through. Everything that you think an analyst might be thinking, everything that a hedge fund or institutional trader again might be thinking. You got to think it all the way through. Right? Again, a company as raggedy as Norwegian Cruise Line right now, and they just got downgraded today, and they got a downgrade today. Right? Not that matters, but again, they got a downgrade today. So. Again, just part of the understanding that it was sale yesterday. I believe I could be wrong. It's either stay or yesterday, but again, it's just a part of understanding if Wall Street think that it's low, that it's at a point where it's just hey, it's oversold. They're gonna buy it regardless. Right? I think it was Wells Fargo, and I want to think. I think it was Webbush, or somebody else might have downgraded them today too, if I'm not mistaken. It was them and somebody else. Matter of fact, you run over to Seeking Alpha. That's one little publication. They got a downgrade on it too. So Wells Fargo lowers Norwegian Cruise Line on second wave risk, right? Because again, they think about what the coronavirus coming back, fall of the year, and they talking about opening up the cruise lines around what August and September, right? So how you gonna open up, fall September and August, and then they already talking about the second wave of coronavirus supposed to be picking back up during that time frame. I don't know, I don't know what to say. But Wells Fargo again takes a deep dive into the cruise line. Again, they're saying part of the firm's downgrade cruise line start equal weight to overweight, from equal weight, to equal weight from overweight. Right, so they slightly still somewhat kind of watching it. That's kind of like from a buy to a hold. Right, it's not necessarily a complete sale. But hey, so they send out a $14 price reflection, 25% discount where it's at this point. But again, depending on how you look at it, we'll see. We'll see. Right, we shall see. But that's it, guys. So I just want to share that with the family. Again, in all fairness to what we do and how we do it, it's always good to look at some charts and look over some information and see what's coming from it. But I hope you guys, like I said, benefit from the information. Again, I hope everything works out in a way where we can continue to, benefit off the information, in terms of what it can do for us helping you trading. matter of fact, hold dang, this thing making crazy. Now we was doing fine all up to this point, and now my doggone screen want to lock up and act retarded. But again, I just know it's all kind of craziness. But yeah, so again, we just want to keep our eyes on, making sure that the market, provides us the most clear path though, of understanding what's happening to it, what's happening in and around it. If you trading any kind of tight frames or tight chopping zones in the market, just be careful because again, it's a very nutty market out there right now. It's a very nutty market. So focus on stocks that are, I should say again, one or two or three that you can kind of get a good value of information on and follow them. And don't try to trade every single thing out there that's moving. If you just don't if you don't see it, don't waste your time trying to chase the markets. Based on what I'm saying, chasing a lot of stuff that you can't necessarily quantify. Right. So yeah, so Cisco moving a little bit here after hours. So they must have beat. Well, no, I don't know if it's gonna hold, but and Jack in the Box selling off. And oh man, yeah, Jack in the Box. I was thinking about hitting it too. Again, I know it's hindsight, but yeah, it was one that I was thinking about. But yeah, they selling off here after hours. So that's Jack in the Box. So yeah, so that's it, guys. So again, I'm gonna get ready to get off here. Again, I appreciated it. I appreciate you guys coming through. Hanging out with your brother again. I look forward to kind of building with you guys again, potentially tomorrow. If things work out and go live again tomorrow. I'll be, going live again tomorrow. Try to share a little bit of action there, but again, there goes Jack in the Box, right? And there goes Cisco. Now Cisco, again, good luck. All I'm saying, good luck. If you went long Cisco for around $42 a share, we'll see if it holds. But right now, it's looking weak. Jack in the Box, clear gap down. Clear gap down from that $63, $64 level. Gap down about 54, so it's already down like $5 at this point. For that to come back at this point in a market like this place, you're going to have to be something staggering. They're going to have to give a really good conference call, but this thing might be downtrending tomorrow, so it might be on short radar tomorrow, Jack in the Box, right? Just keep your eye on it. It's looking like it's getting ready to go lower right now as we speaking. Right, so there we go. It's bleeding a little bit. Starting to bleed a little bit. And there goes Cisco. Just like I said, here comes Cisco. Even though it spiked up, but what I say in this marketplace, they can't buy back share because y'all Cisco is a man. They so criminal with it. They just buy back shares. They've been buying back shares for the past 2 years, it seems like, and the company still ain't really did nothing. So they can't do it. They can't pull that stunt this time. So people got turned on the Cisco game, and they ain't pumping out no organic growth. The markets ain't buying that garbage no more. So they selling it off. Even if they come in with some old fugazi numbers, they selling the junk off. And so just like that, it started like it want to come back down here, after dropping this earnings number. So we'll see. We'll keep an eye on it though. All right, guys. So that's it, guys. Like I said, I'm getting ready to get off here. Peace, power, profit, everybody. I hope y'all benefit from it. Any last words, Brother Namex?
Oh, thank you, brother. Everyone, do your due diligence.
Facts. 100% agree with that. Due diligence and discipline. All right, that's what keeps you in the game. All right, over Chris. Any last words, family?
Let's keep going. Marathon, not a sprint.
That's it. 100% agree with that. We're thinking long term because we know there's, if we're really going to be, the financial vanguard that we're building ourselves out to be potentially in a position where you can help and train other people at some point in the future, your peers, your family members, this, that, and the third, it's going to require you to knuckle down and you go put that sacrifice in today so you can make it easier for those coming behind you tomorrow. That's what it's all about. Because again, it's always better when you have a clan of people that can have the opportunity to make money for current income through certain aspects of things like we use in terms of the financial markets, as opposed to them feeling like they kind of, in a chokehold and having to go to work for money. This is a great opportunity to get people solidly poised in position to see that there's always other benefits and opportunities out there waiting on them. And what we're doing today will be an indication or a track record us laying that groundwork so we can obviously help bring people into the fold of this, a lot later. So stay on your grind. Keep one ear to the market at all times. Learn this stuff. I say learn it, earn it, love it, then share it, basically whatever the case. So again, just stay on the course, right? And I think it's going to benefit us in the long run, right? So again, with everybody again in the back chat, YouTube world, again, thank y'all for coming through as always. Thank y'all for supporting the second channel. Again, we'll be over here until we get the other channel kind of resolved. So again, there ain't nothing just like every day for us. We ain't lost nothing. All right, we ain't lost nothing. All right, so if you haven't subscribed yet, subscribe to this channel until we get the other channel back up and running. But then if you want, you can unsubscribe from this one. Just stay over there. And again, I'm not even a big sticker when it comes to all that stuff. It just, if you do like the content, you want to keep up with it, hey, subscribe. When I go live, you guys can catch it. All right, so peace, power, profit, brother Sunline over Sunline. Peace, power, profit, brother T, brother Mathis. Peace, power, profit, Eva Camille, right? Peace, power, profit, Oakley Brandon. Peace, power, profit, family, GPJ. Thank you for coming through, Mr. Maroon Man. Thank you for coming through. Family Cristiano, fam, Vivo. Thank you for coming through, fam. Again, everybody that's that didn't type, that's probably watching in the back chat. Thank y'all for coming through. Brother G Deb, thank you for coming through, fam. Peace, power, and profit. Everybody that came through today. Open Chris again, brother Nameless, can't say it enough. Thank you guys as always. And then till tomorrow, man. Again, trade safe, choose well, and stay green. And we'll be back this thing again tomorrow and see how this market's gonna turn over, or it's gonna rise tomorrow. Either way, we're gonna be ready. Right? We're gonna be ready to see what this craziness gonna be. Okay? So it's like, get your popcorn. That's all I can say. Just get your popcorn. They're gonna try something. I got a feeling they're gonna try something crazy. They're gonna try something. So. Oh yeah. All right, guys. So until then, I'll see you guys on the next one, guys. Peace, everybody.
Right. Yeah. Stay green, everyone.
Stay green, family. Peace, power, and profit, everyone.
Yeah.